Okay, good morning, everyone. Welcome to Baiju's Exam Prep IAS. This is Shyam Kagod here. Now, before I start the discussion, if there is no issue with the sound, can you please give me a thumbs up? Let me know that I'm audible so that we can start the discussion. Done. Let's start. So, yesterday we continued with discussion on banking, correct? Yesterday we continued the discussion on the concept of banking. We are done with banking. Only one part is left out, NBFC. We'll finish it now. What we have discussed yesterday? We continued the discussion on the concept of the IBC, Insolvency and Bankruptcy Code. Right. Before that, why NPAs are higher? What is NPA? What is the issue if NPAs are higher? Right. What are the contributing factors to that? We have discussed, and after that, we have discussed reforms undertaken by the government. Mostly the most important ones, that is Insolvency and Bankruptcy Code as well as the NARCL, Asset Reconstruction Company Limited, NARCL, how they will help in reducing, right, basically addressing the issue of non-performing assets. And after that, right, after we have discussed the concept of IBC as well as NARCL, we started with the concept of in a cooperative structure. Right? What is a cooperative? Two or more, 10 or more people who are above the age of 18 years will come together and will form a grouping that is called as a cooperative, right? So we have cooperatives in housing, cooperatives in textiles, cooperatives in sugar, cooperatives in many other, including banking sector. Now, in case of banking sector, cooperatives are generally divided into two parts. One, the rural cooperatives. The second one is urban cooperatives. Rural cooperatives, again, these are two divisions based on the kind of loans they provide, short-term loans or long-term loans. We have divided into state cooperative banks, right? SCBs, district central cooperative banks, and lowest level, we have primary agriculture credit societies. And on the other side, long-term loans, we have at the highest level, state cooperative agriculture and a rural development bank. And below that, we have a primary cooperative agriculture and a rural development bank. On the left side, urban cooperatives, right? It is scheduled as well as non-scheduled. These can be multi-state as well as a single-state cooperatives. Okay. Then we have discussed certain important provisions. That is amendment to RBI Act of, Banking Regulation Act of 1949, bringing urban cooperative banks, the cooperative banking, bringing the cooperative banks under the regulation of Reserve Bank of India. Then what was the issue of cooperative banks? Dual regulation. Dual regulation was an issue. Government again amended the Banking Regulation Act in 2020. Now regulatory powers have been given to Reserve Bank of India. After that, we have discussed RRBs, regional rural banks. Originally, we set up a committee, Narsimham Committee, and this committee recommended that we should have certain banking structures, especially targeting the regional areas or rural areas. Looking at that, in 1975, Government of India introduced the RRB Act, and under that, with a particular structure, we promoted the model of RRBs, wherein 50% will be owned by the center, 15% will be owned by the state governments, and the remaining 35% will be owned by the sponsoring banks. Then, what is the importance of RRB? What has been the concern regarding RRBs, etc. We have discussed. After that, NABFID, National Bank for Financing Infrastructure Development. It's a development bank which will borrow money, right, either from RBI or from, let's say, the bond market, etc., and will use this to provide loans for infrastructure development. That's very important. Loans for infrastructure development. And the objective was very simple. Government said initially 100% will be owned by me, but over a period of time, I'll reduce the ownership to 26%. And the NABFID will promote investment, long-term investments, as well as will promote investments in infrastructure, right? That is long-term as well as large value investment. It will promote multiplier effect, etc. So that is what we have discussed regarding NABFID. Then small finance banks as well as payment banks, both are differentiated banks. Small finance banks, right? Basically, these have been opened in India, promoted by RBI, of course. Certain conditions are there. Minimum investment should be paid up capital should be 200 crore rupees, up to 74% foreign investment you can bring. but the conditions are very simple. The small finance banks are supposed to have a PSL of 75%. PSL of 75%. 50% of the loans should be small value loans, so that more and more farmers, small industries can take loans from small finance bank. After that, we have discussed the concept of payment bank. I have one more type of a differentiated bank. Payment banks, basically, the Reserve Bank of India is promoting payment banks for promotion of remittances, for promotion of value added services, etc. Payment banks minimum investment capital should be 100 crore. Foreign investment up to 74% is allowed. Payment banks can collect deposits but not more than 2 lakh rupees per customer. Payment banks are not allowed to give loans. The capital adequacy ratio of payment banks is 15%, minimum 15%, and out of that, tier 1 capital should be at least 7.5%. Tier 2 capital should not be more than 100% of tier 1 capital. So these are some of the conditions which are generally associated with the concept of payment banks. Then we have discussed Narsimham Committee 1 and Narsimham Committee 2. Right? So what are the recommendations, why they have recommended, etc. Now we started with NBFCs. We are left out with a small part of discussion of NBFCs. Let's finish it. Then we can take up questions, but not immediately, after certain time. So NBFCs, non-banking financial companies. Non-banking financial companies. What is this non-banking financial company? The non-banking financial companies are established under the Companies Act of 2013. Companies Act of 2013. And these non-banking financial companies, multiple types are there. These can be deposit accepting or non-deposit taking, right? The deposit taking as well as non-deposit taking. Best example, we have Bajaj Finance, we have insurance companies, we have mutual fund companies, etc. So there are a lot of these NBFCs which are present in India. More than 10,000 NBFCs are there. The argument is very simple. The regulation regarding NBFCs has been given to Reserve Bank of India. Any NBFC or any entity wants to start an NBFC, they are supposed to take a certificate from Reserve Bank of India. So RBI generally regulates the deposit accepting NBFCs. And for other NBFCs, we have other regulators such as IRDA, right, PFRDA, SEBI, etc. Now, apart from this, we are supposed to start from the scale-based regulation of NBFCs. Very recently, that is last year, RBI came out with a new form of a regulation which is applicable to NBFCs. RBI stated that NBFCs are also conducting many activities which are conducted by banking sector. I'll repeat the statement. NBFCs are also involved in conducting many of these transactions or activities which are generally conducted by banks also. Now, when we have so much regulation over the banks, when we have so many stringent conditions on these banks, we should also have the same kind of regulations on NBFCs. And that is a precise reason RBI has introduced a concept called as scale-based regulation. Scale-based regulation. And what is the concept of a scale-based regulation? NBFCs will be classified into 4 types. I repeat, NBFCs will be classified under 4 groups, and from one group to another group, the regulation will keep on increasing. Now, many of you will keep on asking me, sir, what kind of regulations are there? These are all technical regulations. We can discuss all of that, but these are all technical regulations. For example, what should be the duration of board of directors? What should be the classification of NPAs? What should be the concentration limits? Concentration limits basically means whether you are allowed to give how much value of the loans. Out of total loans, how much should be the value of loans given to only one borrower. That is called as concentration limits. So from one level to another level, the kind of regulatory, let's say, provisions, kind of regulations which have been announced by RBI will keep on increasing. That is the reason this is called as a scale-based regulation. Now, what are the 4 classifications which have been announced by RBI? The 4 classifications are top layer, upper layer, middle layer, and base layer. Top layer, upper layer, middle layer, and base layer. I'll just give a number so that you understand what I'm talking about. 1, 2, 3, and 4. And RBI says these top layer, upper layer, etc., these will be arranged in a pyramidal structure. these will be arranged in a pyramidal structure. All of you have seen pyramidal structure, right? So in pyramidal structure, these will be arranged into 4 classifications. And this will be top layer, this will be upper layer, this will be middle layer, and this will be the base layer. Now, please have a look at the pyramid structure that I've written here. By looking at the pyramid structure, is it okay if I say that most of the NBFCs, I repeat, most of the NBFCs will be in the base layer? I'll repeat it. Please look at it. Please look at the pyramidal structure and let me know, looking at the pyramidal structure, is it fair? Is it okay if I say most of these NBFCs will be classified under the base layer? Anybody has a problem related to this statement? Please do let me know. If you ask me, sir, how can you say most of the NBFCs are classified in the base layer? Please look at the space that is occupied in the base layer. How much space is there in the base layer? It is the highest. How much space is there in the base layer? Very high space is there in the base layer. So RBI says, right, pyramidal structure, just similar to pyramidal structure, which means base layer, NBFCs classified in the base layer will be highest. More than 9,000 NBFCs have been classified in the base layer itself. Now, what kind of NBFCs? NBFCs which are non-deposit taking. NBFCs which are non-deposit taking with asset size of up to 1,000 crore rupees. With asset size of up to 1,000 crore rupees, non-deposit taking NBFCs will be classified in the base layer. Now shift to the middle layer. If you shift to the middle layer, the deposit taking NBFCs, all these deposit taking NBFCs will be classified in the middle layer, and plus the non-deposit taking NBFCs which have assets of more than 1,000 crore rupee will be classified in the middle layer. If you go to the top layer, if you go to the upper layer, right? Last is the top layer. If you shift to the upper layer from the middle layer, we will take NBFCs. We will take NBFCs, the largest NBFCs, around 20 plus largest NBFCs. We will take them and keep them in the upper layer. And before I go to the top layer, listen carefully now. As we shift from the bottom layer, or that is the base layer, to the middle layer, and from the middle layer to the upper layer, I'll repeat this statement, the regulations imposed by RBI will keep on increasing. More and more strict regulations will be imposed by RBI on these NBFCs. In fact, any NBFC which is classified in the upper layer, the RBI says we will treat it like a bank only. We will have regulations on par with banking sector. Whatever regulations we are applying for banks, we will apply similar regulations even to these NBFCs which are there in the right upper layer. So that is the reason this kind of a classification has been done by RBI now, just to improve regulations in the NBFC sector. And many of you ask me, sir, what about the top layer? Right? What about the top layer? As of now, RBI says, right? Understand this carefully. As of now, RBI says the NBFCs in the top layer will not be there. There will be no NBFCs in the top layer. Why? We are assuming the top 25 to 30 NBFCs which require very strict regulations. We are keeping them in the upper layer. Now, even after this, we have very strict regulations here. We have regulations on par with banking sector on these NBFCs. Even after this, right, if there is a requirement of a higher regulation, then RBI says we will shift some of these, right, the upper layer NBFCs into the top layer. But as of now, it has not been done. Most of these NBFCs are there in the base layer. Very few NBFCs, around 20 plus NBFCs are there in the upper layer, right? We do not have NBFCs in the top layer as of now. Can we go forward now? Everybody is okay with this? How can RBI regulate non-deposit taking NBFCs while they are regulated by other regulatory bodies? My dear, please understand, RBI will not tell them how to operate. RBI cannot tell how to operate. But let's say in terms of other regulations, for example, quality of the assets, for example, board members, right? These kind of regulations RBI can do, because historically, if you look at factual information, NBFCs, as per Government of India's provisions, NBFCs will come under the regulation of RBI. RBI can do it. Okay, done. So this is basically the scale-based regulatory measure that has been announced by Reserve Bank of India. When RBI will shift upper layer NBFCs to top layer, I'll repeat it. RBI has not classified anything, any provision as of now. RBI says we will have the same regulations, similar regulations, on par regulations for the upper layer NBFCs as we have for banking sector. Now, with these kind of regulations, we expect NBFCs not failing. We expect NBFCs to work properly. We expect NBFCs, right, to ensure there is a, right, let's say, healthy environment. But even after that, if I fail, RBI will decide it. If I feel this is not sufficient, even after that, if I see that NBFCs are failing, NBFCs are incurring losses, etc., then I will shift them. I will shift them. And please understand this. It is always done by RBI. RBI will decide which should move up, which should move down, etc. So RBI will decide when to shift these to the top layer. Okay, done. Let me go to the next one. What is the importance of NBFCs? Why NBFCs are so important in Indian economy? Please remember this. NBFCs are also referred to as shadow banking. These are also said to be conducting shadow banking. What do you mean by shadow banking? Just like a bank, whatever bank does, we are doing those activities, but without taking a license of a bank. Is it okay? I'll repeat the statement. Just like a bank, we are doing a similar activity. For example, bank will collect deposits. NBFCs are also there, which are allowed to collect deposits. Banks will give loans. There are NBFCs which will also be allowed to give loans. So there are NBFCs which are doing similar activity just like a bank, but without a license of a bank. That is the reason these NBFCs are also referred to as a shadow banking institutions. Shadow banking institutions. Now, what is the importance of NBFC in the economy? First one, NBFCs can create demand in the market. NBFCs can, right, lead to capital formation in the market. Many of you will ask me, sir, how is that possible? Imagine you go to a shop, electronic store, and you want to purchase a mobile phone. But you're concerned that you do not have sufficient amount of money, or you have money, but you don't want to spend all of it in buying a mobile phone. In that case, there are many NBFCs which will provide 0% interest loan to you. There are many NBFCs which will provide 0% interest, right? Zero rupee down payment loan to you. For example, if you have gone to Chroma, if you have gone to Reliance stores, you want to purchase anything on many of these apps, Amazon, etc. These NBFCs such as Bajaj Finance will provide a loan to you. So can I simply say, if they give a loan to you, you will purchase a mobile phone. Is it not creating demand in the market? All of you okay? Is it not creating demand in the market? So NBFCs can add to capital formation. NBFCs can add to aggregate demand in the market. They can lead to a demand in the market. That is very, very important. That is very important. Banks do that, and NBFCs are also doing it. Now, many of you ask me, sir, you said capital. How NBFCs will add to capital formation? NBFCs will give loan to infrastructure companies. NBFCs will give loans for purchasing of homes. NBFCs will give loans for purchasing tractors, purchasing two-wheelers, etc. Even education loans. So in that particular context, NBFCs, if they give a loan to a company, they are going to add to capital formation in the economy. So one, they will create a demand as well as add capital, right? Add to the capital formation. It will also provide loans to certain borrowers who are classified as very risky borrowers by the bank. For example, imagine a borrower has very low credit rating. A borrower has very low credit rating. Some of the banks might simply say, no, we will not give you loan because your CIBIL score is very low. I will not be able to give you loan. NBFCs, right, they will give the loans to them. Even though your CIBIL score is lesser, NBFCs will give you loans, but their condition is they will charge a higher rate of interest. right? So there is this promotion of providing loans to even those borrowers who are found to be very risky. That is one more importance of NBFC. Many of these NBFCs are specialized. Many of the NBFCs are specialized to lend to specific sectors. For example, some of the NBFCs, let me know whether you have heard of these or not. Have you seen some of the NBFCs providing only gold loans? Yes or no? Have you seen some of these NBFCs providing only gold loans? Only gold loans, right? They'll say, if you want a gold loan, approach me, right? I'll give you a very good gold loan. I'll give you a very high value of right loan on the gold that you want to pledge with me. So these are specialized institutions. There are various NBFCs which are specialized in giving only housing loans. Only housing loans. They will give only housing loans. There are various NBFCs which are specialized in giving infrastructure loans. So unlike a bank, I repeat, unlike a bank which will provide all the types of loans, in NBFC sector we have NBFCs which are specialized in giving loans, right, to specific sectors. That is another importance. Third one, unbanked borrowers can become bank borrowers now, right? Some of the borrowers who find it very difficult to get a loan from a bank, they will approach NBFCs, take a loan in the NBFCs, and in the future, using this, they can take a loan from a bank. Many of you ask me, how is that possible? How unbanked borrowers can become a bank borrowers? Let's start. I want to take a loan from a bank, but my credit rating is very low. Now I'll take a loan from NBFC, although they will charge me a slightly higher rate of interest. I'll take the loan, repay the loan. Now please tell me, once I take a loan from NBFC, repay the loan very honestly, very promptly, will this not improve my credit rating? I'll repeat the example. Please participate. I've taken a loan from NBFC because my credit rating is low. I'm not able to take a loan from a bank. Now, when I take loan from NBFC, my credit rating was lower. I have promptly, honestly repaid the loan. Will this not will this not push up my credit rating? Of course, yes, it will lead to improvement in my credit rating. Some of you are saying, no, my dear, credit score will improve. Credit score will improve if you are paying honestly, if you are repaying it promptly. But if you take a loan from NBFC, there also you will default. There also you will delay. Right? Multiple times you will delay making a payment on the last day. Then your credit score will rather fall down, not improve. So when your credit score will improve, now with a better credit score, can you approach a bank and take a loan in the future? All of you okay with this? With a better credit score, now in the future, can you approach a bank and take a loan from a bank? Of course, yes, that is also possible. So NBFCs will help unbanked borrowers to become bank borrowers. That is also one of the importance of NBFCs. Done? Can we go forward now? Sir, but that borrower whose credit rating is low, how can he repay high interest rate? My dear, please tell me, will a financial position of a borrower always remain same? Let me know, will the financial position of a borrower, will it always remain same? Of course, no. Right? Maybe in the past, you had taken a loan, but because you lost the job, right, or because right, you did not have sufficient liquidity, there could be many reasons for it. You defaulted, you did not repay it on time. That's the reason your credit score has fallen down. That is in the past. But don't you think today, right, you are in a better financial position, but the bank is not willing to take a risk. Bank is not willing to take a risk. So you will take right a loan, pay a higher rate of interest, improve your credit score, and then maybe in the future approach a bank. Okay, that is possible. Please understand, that's possible, very much possible. So these are the reasons why NBFCs are so important in Indian economy. Having said so, what are the concerns? What are the issues regarding NBFCs in recent times? Point number one, during pandemic, please understand this. Generally, how does NBFC give loan and from where does it collect money? NBFCs generally approach banks, take loans from the banks, or generally NBFCs will approach customers, issue right deposit instruments in the market. Let's say 60-month deposit instrument, right, or 12-month deposit instrument, and borrow from customers, right? Or else they will go to the bond market, issue bonds, issue other instruments, borrow from the market. So please understand, NBFCs have multiple ways to raise money which they will use it for lending purposes. Now, during pandemic, what has happened? Very simple. Many NBFCs have incurred losses. Many NBFCs have incurred losses. Many of the NBFCs have incurred losses. And many of these banks also have incurred losses. Right? And this, because of this, what has happened is now banking sector giving loans to NBFCs has come down. Again, during pandemic, now it has started improving, and RBI very recently has raised an alarm, has raised a concern regarding this. Please understand this very carefully. During pandemic, what happened was many NBFCs, right, they were not able to borrow from the banks because even the banks were suffering because of the pandemic, and that affected lending activity of the bank NBFCs. That affected lending activity of the NBFCs. And on the other side, NBFCs had given large value loans, lot of loans to many borrowers in the market. Pandemic affected the recovery of the loans. That is NPAs. The non-performing assets in the NBFCs also increased because of the pandemic. So on one side, funding problems. That is, the NBFCs were not able to generate capital, were not able to collect sufficient capital thanks to pandemic. On the other side, NBFCs have given loans, and these loans are becoming more and more NPAs. That is also adding to the stress in the NBFC sector. So funding issue, because of the slowdown and recession, they have been facing repayment issues. The credit which has been issued, loans which have been issued by the NBFCs have been affected, and NBFCs are also facing the issue of asset liability mismatch. NBFCs are also facing the issue of asset liability mismatch. Now, very recently, what RBI is saying, right? Listen to me carefully now, current affairs. Very recently, what RBI is saying is that banks are giving lot of loans to NBFCs. This has started now. Banks are giving lot of loans to NBFCs. Now, please tell me, if banks are having very high exposure to NBFCs, and if NBFCs incur losses, is there a problem? Is there a concern that those losses might also shift to banking sector? Yes or no? Please think of it and do let me know. Right? Banks are giving lot of loans to NBFCs. And NBFCs, by taking lot of loans, they are also giving loans. They are also taking a higher risk by giving loans. Now, if NBFCs incur losses, don't you think that risk, right, that the risk of incurring losses might also spread to the banking sector, because the bank is taking more exposure by giving loans to NBFCs? That is the precise reason. At least now all of you okay? That is the precise reason. RBI very recently has stated, whenever banks will give loans to NBFCs, risk weightage for these loans should be increased. I'll repeat the statement. When now banks, when they will give loans to NBFCs, right, the risk weightage for these loans should be increased by 25%. Right now, all of you are able to understand why is RBI asking the banks to increase the risk weightage. Can I go forward now? Can I go forward? Anybody has an issue? Please do let me know. Right, so these are the points that I wanted to discuss in the context of the banking sector as well as non-banking financial companies. Now, questions are there. Questions are there. We'll take up questions after some time, not now. Right, let me start with the next chapter. But before that, if anybody has got any kind of doubts, please do let me know. 78. Okay. Now, those who are asking, sir, references. Yeah, after every chapter, I've given you references. You don't have to ask me. And I'm trying to keep the references to as simple as possible, the NCERT books as well as Tamil Nadu board books. My argument is simple, sir. Why are you giving TN board as well as NCERT book? You do not have to pay single rupee for these references. You do not have to pay even a single rupee for these references. You can easily get these textbooks in the website. And those are asking, sir, from where can I get these textbooks? My dear, at the bottom, I've given you two links. There are two links at the bottom, right? So use these links, go to the website, download these books, and in these books, right, what chapter is there, right, what page number, etc. If at all page number is required, I've given it in the table. Please use it, download, and start reading. Okay. And some of you are asking, sir, tell me in that book, tell me in this book. My dear, if you have Ramesh Singh, if you have Nitin Singhania, if you have that book, if you have this book, can you not find a chapter by the name banking in Nitin Singhania book? Please tell me. If you have Sanjeev Verma's book, if you have Ramesh Singh book, right? If you have this book, XYZ, can you not find a chapter by the name of banking? Of course it is there, right? Some of the students say, sir, in Tamil Nadu board, I don't know which chapter to read, which standard book to read. I do understand. That's a very, very valid question. Some of the students will say, sir, NCERT, which chapter to read for banking? I don't know. Valid question. But if you have any book, any other book, right? Let's say Nitin Singhania, Ramesh Singh, Sanjeev Verma, whatever the title of the book, whatever the author it is, straightforward, they would have written banking chapter. Chapter number 5, banking. Chapter number 6, budget. Chapter number 7, right? Exchange rate. Right? It's already there. Please use the reference. Okay. Now, before going to the next chapter, questions. How does capital formation by giving loans at 0% rate will benefit NBFCs? Please understand this. Whenever you have this kind of, let's say, advantage where 0%, they will say 0% rate of interest or 0 processing charges, etc. Generally, what would have happened is the NBFCs would have entered into an agreement with the seller. I hope you understand, right? The NBFC, right? Anybody who's going to provide you that facility, right? They would have entered into an agreement with the seller. That is, I'll promote your product, but you will have to give me a certain percentage of margin. So by giving a loan to you, if you delay making a repayment, definitely yes, they will charge interest and they will collect it from you. But argument is they would enter into a tie-up with the seller, agreement with the seller, where revenue sharing model is actually used. Okay. Okay, any other question? So PPT is enough. PPT, right? The books plus current affairs. PPT, books as well as current affairs. And because I'm saying current affairs, today's Hindu newspaper, the people who are reading today's Hindu newspaper, you should be happy because from economics, I repeat, from economics, no such article is important. Be happy at least for today. From economics, no such article is important. Of course, there is one article, but I don't think so that is important for examination purpose. In the business page, there is an article on Reserve Bank of India. In the business page, there is an article on Reserve Bank of India. RBI report says asset quality in the banking sector has improved in the last 10 years. Right? Asset quality in the banking sector has improved in the last 10 years. Lot of data is there. Right? The gross NPA has come down by this. It was increasing by this much. I don't think UPSC will accept, ask you questions on those numbers. Right? Because from one year to next year, from one quarter to another quarter, data will keep on changing. Okay. Any other question? Any other question? Some of you are asking, how can NBFCs improve credit rating? My dear, please understand, NBFCs do not give you credit rating. I'll repeat the statement. NBFCs do not give credit rating to you. What these lenders, NBFC is also lender, bank is also lender. What these lenders or creditors do is they'll keep on reporting the data to CIBIL. All of you okay with this? They'll keep on reporting data to CIBIL. And CIBIL will decide based on the data or the inputs they are receiving. They will decide whether your credit rating should be improved, whether your credit rating should be downgraded, etc., etc. They will decide it. In the NBFCs will not decide it. Okay. Okay. Can we go forward now? Next chapter that we'll take up is fiscal policy. Next chapter that I'll be taking is fiscal policy. We'll discuss budget as well as finance commission. right? Budget as well as finance commission, right? Very important. Both are very important, budgeting as well as finance commission, because the questions have appeared both in prelims as well as mains from both the areas. So what I'll be discussing under the chapter, we'll start with budget. We'll discuss what are the important concepts related to budget, how budget is passed, what is the importance of the budget, right? Let's say what are the accounts in the budget next year, right? I hope you know we are in the month of December, right? All of you are okay with that? We are in the month of December, hardly couple of days. We'll finish even December, we'll enter into January next year. So January end, you will come across the discussion regarding budget. So please be very, very careful, right? Please be very careful, especially if you're writing exams next year. Generally, UPSC has the tendency of picking up question from the budget. So that is the reason. Please be very careful. So budget, important concept, process of budgeting, accounts and deficits in the budget, right? And now please tell me, yesterday I had asked you to read an article about fiscal deficit. Yes or no? We'll discuss what is fiscal deficit today. FRBM and NK Singh Review Committee, public debt, and then we'll discuss finance commission. And couple of weeks ago, if you're reading newspapers, you'll know this. Couple of weeks ago, Government of India has announced establishment, setting up of 16th Finance Commission. Right? Very recently, Government of India has announced establishment or setting up of 16th Finance Commission. Announcement has already been done. Now, what is this concept of a budget, etc., etc.? Let's understand it. Let's start with the basic concepts. Let's start with basic ideas. Point number one, the term budget, please remember this, is not mentioned in Constitution. Term budget is not mentioned in the Constitution. Please remember this. This has been asked once in UPSC. The term budget is not mentioned in the Constitution of India. Then what is mentioned in the Constitution? Under Article 112, it says Government of India has to provide annual financial statement. Under Article 112, government has to provide annual financial statement, AFS, annual financial statement. That is generally what Government of India says we are going to do it. Point number two, whenever you talk about budget, budgets are announced by union government. Every year budget is announced by the union government. Budget is also announced by the state governments. Now for the state governments, as long as you are writing UPSC, you don't have to be worried about state budgets. Be focused always on the union budget. Now if you're writing a state PCS exam, then I would simply say, from whichever state you are coming from, that state government budget you should also be worried about. Now come to union government budget. Every year, the government announces or comes out with annual financial statement, that is nothing but union budget. But when is it announced? When is the union budget announced? Right? Until couple of years ago, the union budget was announced on the last working day of February. Until couple of years ago, the union budget was announced on the last working day of February. But from 17 and 18, Government of India has decided, right? No, we will not announce it on the last working day. Rather, we will announce it on the first working day of February. First working day of February. Right? So I will repeat the statement. Until couple of years ago, the union budget was announced on the last working day. But now we are not announcing it on the last working day. We are announcing on the first working day. Why? Sir, why has the government done it? Is there any logic behind it? There is a perfect logical sense. Government says budgets are announced for a financial year. I'll repeat the statement. Budgets are announced for a financial year. Financial year means what? Financial year, for example, I'll take next year so that you understand it. Budget, whenever it is announced, the announcement is for a period of 1st April 2024 till 31st March of 2025. The next budget, when you will come across it, that budget is applicable. Announcement is done, but it is applicable for this period, 1st April 2024 to 31st March of 2025. Now imagine government will announce it on the last working day of February 2024. Then there is a process to be followed, and by the time the process gets over, and now government will start spending money by taking money from Consolidated Fund of India. Don't you think we might already be in the next financial year? What if the whole process gets over? The whole process of budget gets over, then government will start spending money, and this will be done in the month of May. It is being done in the month of May 2024. So in May, process is over. Now government will start taking money and start spending money. So don't you think we have already entered into the next financial year? So there might be delay. There might be certain delay in providing funds to various projects, funds for various programs, various ministries, etc., etc. So earlier, when we used to do it on the last working day of February, right, there was a concern. And to address that concern, to address this particular issue, Government of India now says from last working day, we will shift it to the first working day of February. And by the time the financial year will start, we would have already passed the budget documents. That is basically the second point. Third point, right? Understand this. What is the need for having a budget? Why should Government of India have a budget today? Is there any reason for it? The reason is, please remember this, under the Constitution of India, there is a fund called as Consolidated Fund of India. Under the Constitution of India, there is a fund called as Consolidated Fund of India. In fact, I'm pretty sure polity classes are over for you. Morning batch, evening batch, polity classes are already over. Under Article 266, 267, etc., you will come across the Consolidated Fund of India, Contingency Fund of India, Public Account, etc. So there is a fund called as Consolidated Fund. And the Constitution of India says, if Government of India wants to withdraw, wants to take out even a single rupee from the Consolidated of India or Consolidated Fund of India, it requires approval of the Parliament. Approval of the Parliament. All of you okay with this? If Government of India wants to withdraw even a single rupee from the Consolidated Fund, it is required to take first the approval, permission of the Parliament. Only then it is allowed to withdraw the money. And that is the precise reason, please understand, government wants to spend money. Government wants to spend money on, let's say, subsidies, on, let's say, infrastructure, on, let's say, repayment of the loans, etc., etc. There are so many expenses that the government wants to incur. All of these expenses, government should take the money from Consolidated Fund. But the article says, take the approval of the government, take the approval of Parliament first. That is the reason government will introduce, I repeat, that's the reason government will introduce bills in the budget, right? The most important bills, I repeat, the most important bills in the context of union budget is, one is appropriation bill, and the appropriation bill will consist of all the expenditure requirements of Government of India. All the expenses which are to be incurred by Government of India will be given in the form of appropriation bill. And the second one is finance bill. The finance bill will basically consist of all the income generation sources. How much income the government is expecting to collect. Again, I can simply say expecting or estimating, because you tell me now, please tell me, think of it and do let me know. Can Government of India tell you exactly how much income tax they will collect next year? Think of it. Can Government of India tell you exactly how much corporate taxes they will collect next 1 year? No, estimates are given. Both are estimates, right? Even in case of expenses, they will tell you estimates. Because next 1 year, how much subsidy is going to be paid by the government, there is no guarantee. They might try to control it. There is absolutely no guarantee. So they will give you estimates, right? So appropriation bill will give you estimates of expenses, and finance bill will give you estimates of income or revenue collection for the Government of India. Income or revenue collection for the government of India. Okay, and that is applicable for the next financial year. Fifth point, right? This point is also important. Please understand. Until couple of years ago, Government of India announced a separate railway budget. Right? This started as a convention. This started as a practice. Back in 1924 and 25, we received a recommendation from a committee called as Ackworth Committee. And this Ackworth Committee recommended that we should have a separate railway budget. And from then, we started having a separate railway budget. Apart from the union budget, there would be a separate railway budget. And after independence also, this continued as a convention. As a practice, it continued. But the government of India very recently stated having a separate railway budget is not a constitutional requirement. Having right, a separate railway budget is not a constitutional requirement. And that is the reason what we have done. We have taken the railway budget, merged it with union budget. Now, there is no separate railway budget. No separate railway budget. And when I say no separate railway budget, please understand, earlier the practice was 3 days, 4 days before the union budget was announced, railway minister used to announce railway budget. I hope you have seen it or at least have heard of it. Right? Couple of years ago, 3 to 4 days prior to the announcement of the union budget, the railway minister used to announce a separate, before the announcement of union budget, a separate railway budget was announced. Now we are not having that convention. We have taken the railway budget exercise, put it as a part of union budget, and whoever is the finance minister, not the railway minister, finance minister will announce the complete budget, complete, including railway budget. Done. So no separate railway budget now. It is a part of union budget only. Sixth point, whenever you talk about budget, please understand, a budget can be a surplus budget. Budget can be a surplus budget. Budget can also be neutral or balanced budget. Not neutral, balanced budget. A budget can also be a deficit budget. A budget can also be a deficit budget. Now, what do you mean by surplus budget, balanced budget, and deficit budget? Surplus budget simply means where the income you have collected, the government of course, where the income that you have collected is greater than expenditure. Where the income that you have collected is greater than expenditure, that is called as a surplus budget, which means you are earning more compared to your expenses. That is called as a surplus budget. What do you mean by balanced budget? Income is equal to expenditure. Income is the same as the expenditure. That is called as a balanced budget. What about deficit budget? Deficit budget where income is smaller than expenditure. Where income is smaller than expenditure, that is how much money you are earning, it is smaller than the money that you are spending. Expenses are more compared to income. This is called as a deficit budget. Now, please tell me, assuming you people are reading newspapers, please tell me which of the three do you think India follows? Let me know. Which of the three do you think India is following? Is India following a surplus budget, balanced budget, or deficit budget? All of you will agree, in India there is a deficit budget. Yes or no? In India there is a deficit budget. That is, government's expenses are more compared to government's income. And that is the reason, if you are reading newspapers, I asked you to read one article, fiscal deficit. Fiscal deficit is nothing but government borrowing. Right? Government of India spends more compared to the income. So government will borrow because of deficit in the budget. Right? So surplus, balanced, and deficit. These are the three types of budget. But in case of India, we generally follow a concept of deficit budget. Okay. Now, couple of more concepts associated with the budget. Couple of more concepts. One is called as a gender budget. Second one is called as a zero-based budget. Third one is the outcome budget. Right? First one is a gender budget. Second one is a zero-based budget. And the third one is outcome budget. Now, what is this gender-based budget? What is this outcome budget as well as the zero based budget. Let's start understanding all the three. What is this gender budgeting? What is this concept behind gender budgeting? Please understand, in the context of India, out of the total population, female population is also very considerably higher. As per the various censuses, generally around 46 to 48% of total population in India is female population. But when you talk about the presence of female population, compare that with, let's say, out of total children who are there in the school, how many are girl children? Out of total working employees in India, how many are female employees, right, etc. These kind of parameters, or for that matter, out of the total income generated in India, how much is the income generated by female workers, etc. Whenever you compare these kind of parameters, we generally find that the female or the girl children parameters are lagging behind. That is, we are not performing very well in terms of promotion of gender equity. We are not doing sufficient enough. We are still lagging behind. Now, how can we ensure that this will be promoted? How can government ensure that we are promoting gender equity, gender equality, gender empowerment, etc.? How can we ensure that? To ensure that, from 2005 and 2006, government of India started a practice wherein out of the total budget, let's say 30 lakh crore rupees, 40 lakh crore rupees, whatever it is, we will try to find out and ensure that some of these expenses will be used for promotion of female workers. Some of the expenses will be used for the promotion of the other gender. That is, female empowerment will be promoted, right? Ensuring that the girl children will get into the schools, that we will ensure by having expenses. So this practice, I repeat, this practice of allocating funds and implementation of projects, implementation of programs, then evaluation of these programs, this process is called as gender budgeting. All of you okay with this? All of you okay? I'll repeat it again. Right? What do you mean by gender budgeting? Gender budgeting, it is a practice, it is an exercise wherein the government will allocate funds, utilize the funds and implement certain programs or projects, and then evaluate the implementation, allocation, right, utilization, as well as evaluation of all these projects is undertaken by the government, and this exercise is called as gender budgeting. This is called as gender budgeting. And this initiative has been taken by government of India. It is done every year, and this has started from the year 2005 and 2006. This started from the year 2005 as well as 2006. Now, why? I'll come back to this, don't worry. Why? What is the need for government of India to do that? Point number one, it is the duty of government of India to ensure that whatever expenses they will incur, whatever expenditure they will do, that will not increase the inequality. I'll repeat the statement. It is the duty of the government of India to ensure that whatever expenses that they do in the budget, that will further not increase inequality. And many of you will ask me, sir, what do you mean by inequality here? Whenever you study, let's say, right, whenever you study regarding labor participation in India, most of the labor participation comes from the male population. Whenever you study, let's say, income generation, right, this is much more interesting, by the way. Out of the total income generated in India, around 18% of the income is earned by the female population. Is it okay? I'll repeat the statement. Let that particular fact sink in, right? Let that particular fact sink in, absorb that fact. Out of the total incomes generated in India, 18% of the incomes are earned by female workers. Remaining 82% is earned by male workers. So can you imagine to what extent income inequality, that is gender income inequality, is present in India? Generally also income inequality is present, that is rich and poor, income inequality is there. But apart from that, gender income inequality is also very, very high in India. Very, very high in India. Right? So again, the argument of the gender budgeting is that whenever government will spend money, let's say create employment, right, promote growth in the economy, it is a duty of the government to ensure these policies of the government will further not increase in income inequality or gender inequality. They should be used to reduce the inequalities. All of you okay with the first point here? It is a duty of the government. Point number two, there is a differing access to services such as education, health, etc. between men, women, boys, girls, etc. Meaning what? In one of the economic surveys, next month, by the way, you will get economic survey also. Next month, you will get economic survey. So in one of the previous economic surveys, the economic survey cited a fact saying that in a household, especially in the rural part, in a household, let's say, right, there are two children, one boy and one girl, and if there is a decision to be made, which of the two have to go to school and which of the two has to take care of house activity, housework, it is generally assumed that the girl children doesn't need to go to school, boys can go to the school, girl children has to do the housework. Correct? I'm not saying it is done in every household. I'm not accusing any one of you of promoting it, but at least will you agree to the fact? Will you agree to the fact? If there are two children and it is to be decided, right? Somebody has to clean the house, somebody has to cook in the house, somebody has to bring wood for right taking care of cooking purposes, and one has to go to school. Generally, the household will decide the boy should go to school and the girl should do this. Right? That is what economic survey says. That is not me. That is what economic survey says. In fact, I don't know how many of you observed it. Economic survey says one more fact. If food is prepared, if the food is prepared and limited quantity is there or whatever it is, generally the first access to food, first access to this food is given to boys. Yes or no? The first access is given to boys, and later the first, after the boys have consumed food, it is given to girls. Right? So again, I'm not saying that you do it. I'm not accusing anybody, but this is a fact. This is generally how it is present in case of rural parts of India. Okay, so again, come back to the point. Differing access to services such as education, such as healthcare, etc., between men as well as women. Government should reduce it. Government should reduce this gap. Government should reduce this gap. Right? For example, please tell me, Beti Bachao, Beti Padhao. Yes or no? Is it not an initiative of Government of India which is going to reduce the education gap in India? Beti Bachao, Beti Padhao. What about right to education? All these, right? I hope you understand. Many of these government policies are done in order to reduce this kind of income inequality, wealth inequality, or for that matter, right? Let's say inequalities to get access to education, healthcare, etc. To promote better usage of labor resources, we need to ensure women population is skilled. Women population will have education, they will have certain, right, let's say qualifications, they will be skilled in the market, they can absorb, they can become a part of the labor force, can be absorbed in the market. In fact, is it okay if I say there are certain sectors in India, where women productivity will contribute more to the growth of the sector? I'll repeat the statement. There are certain sectors in India and globally also where women labor force can contribute better way compared to male labor force. For example, textile sector. What about hospitality sector? And generally, we prefer women labor force because the sector requires that kind of productivity. Right? So to promote better usage of labor resources, and it has been found that in many of these cases, it has been found that gender budgeting will increase the women empowerment, and whenever women empowerment is increased, we are seeing reduction in incidences of cases of violence against women. When women are empowered because of gender budgeting, we are seeing that violence cases against women are decreasing. So these are some of the reasons why we say government should have a concept of gender budgeting. And what is the objective behind gender budgeting? What are the goals behind the gender budgeting? One, We want the government to take up this cause, right? We don't want government to just speak, right? There is a statement in English. There's a saying in English, walk the talk. Have you heard of this? Walk the talk, right? We don't want the government or ministers, etc., to just keep on giving slogans. We don't want them to keep on saying that we should do this for women, we should do that for women, we should do this for girls. No, prove it. How are you doing it? Prove it. We want to mainstream the idea of gender budgeting, right? And if I say government of India will spend 5%, 6%, 8%, 9%, although they have not done it, right? If I say that, is it not basically ensuring that whatever government says, they are following it in the form of allocation of expenses? So we want to mainstream the gender issues in the government policies. We want to promote accountability of the government. How is the government of India spending money, right? Are these schemes benefiting women? Are these schemes improving, let's say, the quality of life of women? We want to hold the government accountable. And right, we also want to change the policies which are followed, the budget exercise which is followed in India, to include, to become more gender sensitive, right? So this is basically associated with the concept of gender budgeting. Now, how gender budgeting has been done in India? How much money has been allocated? Please have a look at the graph. Do not by heart the graph. Do not by heart. It is of no use for you. Whenever you talk about gender budgeting in India, starting from 2005 and 2006, certain percentage every year, certain percentage of the total expenditure in the budget has been reserved to promote gender budgeting. Sir, how money will be utilized under gender budgeting? I'll come to that next point. Don't worry. But if you see on an average, you will see that gender budgeting, the funds which have been allocated, no doubt, funds in absolute terms have increased. I'll repeat the statement, listen to me carefully. No doubt, funds in absolute terms have increased. But as a percentage of total expenditure, it has generally averaged around 5%. I'll repeat the statement. Please do let me know if there is any difficulty. In gender budgeting, how much funds are allocated? Right? The absolute funds means how much money has been allocated. The money allocation under the gender budgeting has increased over a period of time, no doubt. But if you look at as a percentage, there is no such very huge improvement. It has averaged around 5%. All of you okay with this statement? All of you okay? Anybody has a difficulty in this? It has averaged around 5%. It has averaged around 5% out of the total expenditure. Right? So which means, understand this. Can this be one of the way forward? One of the way forward. What is the way forward? Government of India should increase the funding under gender budgeting as a percentage of the total expense. As a percentage of total expenses. Some of you are asking, sir, it is very confusing. What is the meaning of it? Let me explain. You will allocate 10 rupees out of 100 rupees for gender budgeting in 1 year. And you will allocate 20 rupees out of 200 rupees in the next year. Right? In 1 year, 10 rupee out of 100. In next year, 20 rupee out of 200. Now, I will give you a statement. 2 statements. Please do let me know yes or no. Question number 1. Has the absolute expenditure allocated increased in 1 year? Absolute expenditure, absolute Baba, absolute means how much rupees are allocated. Absolute expenditure means how many rupees are allocated. How many rupees are allocated this year? 10 rupee. How many rupees are allocated next year? 20 rupee. So has the absolute expenditure increased? Answer is yes. Next question. Has the percentage expenditure, listen carefully, has the percentage expenditure allocated under gender budgeting increased? Has the percentage expenditure under the budgetary allocation, has it increased? No, it has not increased. Right? It was 10% here and it is still 10% here. Right? So again, that is the point I'm trying to make. right? Women population accounts for around 46 to 47% in India. But out of total expenses for gender budgeting, we have averaged around 5%. For some years, it is more than 5. For some years, it is less than 5. But average is around 5. Don't you think the allocation should be higher? The percentage allocation should increase. And is it okay if I say, if the percentage of expenditure allocation increases, then automatically the absolute expenditure should also increase, but it will increase at a very faster pace. Only thing is that it will increase at a very, very faster pace. I'll repeat it again. Think of it. CSAT concept. If percentage allocation for gender budgeting increases, does it not also mean there is a very fast increase in absolute expenditure allocated for gender budgeting? If you're still wondering what is this fellow telling me, right? It is very difficult. Early morning he teaching me CSAT, etc. Instead of 20 rupees, if I write 25 rupees out of 200, instead of 20 rupees, if I write 25 rupees out of 200, can I say percentage allocation has increased? If you start taking calculator and start calculating it, you will get it as 12.5%. 12.5%. From 10%, it has increased to 12.5%. Does it not also mean the absolute allocation of expenditure is increasing at a much faster pace? It is increasing at a much higher pace. And some of you are asking how it will become 12.5%. My goodness, how it will become 12.5%, my dear? Take your mobile. There's an app called as calculator. 25 divided by 200, tell me in percentage how much you will get. 25 ones are 25 eights are. 1 by 8 is 12.5%. Right? So again, this is one of the way forward. Recommendations. Please remember this. Okay? Done? And some of you are asking, sir, what is the graph showing? Right? How to read this graph? My dear, please read the first line. No? You people are not reading. Please read the first line. The first line says, how much is the share of gender budgeting out of total expenditure? If your total budget is, let's say, 500 rupees, and out of that, if you have, let's say, 100 rupees for gender budgeting, can I say that is nothing but 20%, which can be represented in the form of a graph? 5%, 4%, 4.5%, etc., etc. Okay, done. Now, sir, how they are going to use the money? If the government will allocate the funds, how they will utilize the funds? Please understand this. Government will utilize these funds. Government will utilize all these funds basically to implement schemes. Various schemes are going to be implemented. Various schemes are going to be implemented by the government. Now, what kind of schemes are there? I'll give you some examples. Hundreds of schemes are there. Don't buy at all of them. Remember, some of them more than sufficient. There are schemes where 100% of the funds allocated will be used only for women. I'll repeat the statement. There are some schemes in India where 100% allocation of the funds, whatever funds are allocated, only women will be covered under the scheme. Only women beneficiaries will be there under the scheme. For example, many of you will ask me, sir, any example of such a scheme? Have a look at it. One example I'll give you. Indira Gandhi National Widow Pension Scheme. Look at this example. Indira Gandhi National Widow Pension Scheme. Now, please tell me, when the name of the scheme is Widow Pension Scheme, can male be beneficiaries? Can male be considered as a beneficiary under this scheme? And if you say, yes, sir, they can be considered, then I will tell you, my dear, your English is very bad. English is very bad, because widow means not the male, right, on the female side. Right? So argument is simple. Whatever funds are allocated, right? Whatever funds are allocated, 100 crore, 200 crore, 500 crore, all these funds will be used for female population. And on the other side, right, there is one more scheme, very, very famous. Mahatma Gandhi National Rural Employment Guarantee Scheme. Mahatma Gandhi Manrega. Mahatma Gandhi National Rural Employment Guarantee Scheme. Now have to understand this, under this Mahatma Gandhi National Rural Employment Guarantee Scheme, whatever funds are allocated, 50,000 crores, 60,000 crores, 90,000 crores, out of that government will ensure at least 30%. I repeat, out of these funds, government will ensure at least 30% of the funds will be given or will be utilized for women beneficiaries. So there are schemes where the beneficiaries are only women, and there are schemes where 30% of the funds will be used for women beneficiaries. This is called as Part A scheme and Part B scheme respectively. Part A scheme as well as Part B scheme respectively. So Part A, 100% funds for women beneficiaries. Part B, at least 30% of the funds for women beneficiaries. Now using this idea, using this concept, look at the graph. Do not by heart the graph, please look at the graph. Can I say, looking at the graph, and you're wondering, sir, what should I observe in the graph? Can I say, very small percentage, generally around 20 to 25%. Generally, I'm taking average now. Generally, around 20 to 25% of the funds under gender budgeting are used for Part A scheme. Let me know if I'm wrong. Observe and do let me know. Do not by heart this graph. Remember the averages. Generally, around 20 to 25% of the funds under gender budgeting are used for Part A scheme, which means in this year, let's say hypothetically, 100 crore rupees allocated for gender budgeting. Out of 100 crore, 25 crores are used, assuming 25%. 25 crores are used for Part A schemes where only women are beneficiaries. Only women are beneficiaries. Right? So don't you think another way forward, another recommendation for you should be, sir, right, we should increase the funds allocation for Part A schemes. Think of it. Another way forward, I'm telling you, another way forward for you will be, we should increase the fund allocation for Part A schemes. Right? It is generally lower. We should increase it more. Argument is simple. Sir, anyways, we are giving 30% of the funds, at least 30% in Part B also. My dear, Part A schemes are women-centric schemes. Understand the logic. Part A schemes are women-centric. Our target beneficiary is women. Whereas Part B, both are there, men and women, both are there, but we are ensuring 30% of it will go to women. So having better targeting using Part A schemes will always be better. So that is the reason. Another way forward is increase allocation. Ensure that Part A schemes will start getting more and more funds. Done? And one more point, way forward, please remember this. One more way forward point, you will have to write it. Funds are allocated doesn't mean funds are always utilized completely. I'll repeat the statement. Funds are allocated doesn't always means all the funds allocated are utilized. In many cases, it has been found that various departments, various ministries are not utilizing 100% of the funds allocated. For example, imagine, right? I'm not, but imagine I'm a minister. And in this year's budget, under gender budgeting, right, some of the funds have come to my department. Let's say 200 crore rupees have come to me. Out of 200 crore rupees, I might utilize only 120 crore rupees. So can I say, if allocation is 200, utilization is 120 crore, can I say utilization rate is 60%? All of you okay? Utilization rate is 60%. So we need to improve upon the utilization rates also. That is one more way forward. Please understand, write this also. We need to improve upon the utilization rates under the the gender budgeting concept. So all of you okay with the gender budgeting now? Can we go forward? All of you okay with gender budgeting? Can I go forward? Anybody has any concern, any issue? Sir, how are Pradhan Mantri Awas Yojana allocating 100% funds to women? The beneficiaries, who is the beneficiary? Who is the beneficiary identified to whom will transfer the funds? It is women. That's a reason. Okay. Done. Let's go forward then. Next one is the concept of outcome budgeting. Next one is the concept of outcome budgeting. Now, what do you mean by outcome budgeting? Let me start. Let me start with a very simple example. Imagine you will go to your parents. Imagine, okay, imagine after the class you will go to your parents and you will ask for, let's say 1,000 rupees. You will ask for 1,000 rupees. Suddenly, and this is generally true, suddenly your father will ask you, right, why do you want these 1,000 rupees? Understand this carefully, right? Two questions. One, why do you want this 1,000 rupee? For what purpose you want this 1,000 rupee? You tell me. And second, what will you achieve with this 1,000 rupee? Yes or no? Correct or not? You will ask 1,000 rupee, right? You will ask 1,000 rupee money from your right parents. Maybe you are asking very slowly to your mother. Generally, right? Again, I don't know what is the practice in your home, but my home, when I used to do it, it was very simple. Moms are very, very right affectionate. You would simply approach mom and say, "Mom, I want 1,000 rupee," and suddenly your father will overhear it. He will come running to the kitchen and ask, "Why do you want 1,000 rupee? Tell me." Right? Last month I gave you 500 rupees. You have so far not told me for what you have used it, etc., etc. Understand two things here. Two things. Let's take a household example to make you understand budget. One question your father will ask you: last month I gave you 500 rupees. Tell me what you have done with that 500, and also tell me what will you do with this 1,000 rupee. What will you do with this 1,000 rupee? You will say, "Dad, I want to purchase economy book." Right? I want to purchase economy book. Then your father will say, "No need to purchase. Right? NCERT books are free of a cost. Download it. Anyways, Wi-Fi is there in the home. Right? If NCERT is not sufficient, download Tamil Nadu board books also. So no need for NCERT, no need for economy book." Right? Then you will simply say, "Sir, Dad, in that case, I want polity book. I want polity book." Right? Then he'll say, "Okay, polity book NCERT is not sufficient, so you purchase polity book." Then you'll simply say, "I want to purchase that. I want to purchase a writing pad. I want to purchase pen, etc., etc." You will give another account of, let's say, 300 and 700, and you will show a total account of 1,000 rupee. All of you okay with the first one? All of you okay with the first one? This is the answer to first question. Second question. Now your father will ask you second question. Okay, you will purchase a polity book. You will purchase a polity book. You will purchase a writing pad. You will purchase a right, etc., etc. Now tell me what you want to achieve with that. What do you want to achieve? Then you will simply say, "Next week there is a unit test. I will score 80% marks in the unit test. I will score 80% mark in the unit test." Now please tell me, all of you okay with both of these questions as well as answers? Why I'm explaining all of this? Very simple. Whenever government will conduct budgeting exercise, one, government wants to know, using this expenditure, ministry or a department using this money, what they want to achieve. For example, the ministry might simply say, "I want to construct 1,000-kilometer stretch of national highway. I want to construct 500 schools in villages. I want to build 200 homes for the poor people." That is the result. That is outcome. All of you okay? That is an outcome. That is one question. Second question, if a minister is asking, if a minister or a department or a ministry is asking, let's say 1,000 crore rupees, what is the breakup? Right? What is the breakup of this 1,000 crores? Why do they want this 1,000 crore? For what purpose they want to use this 1,000 crore rupees? So all of you are okay with the same argument imposed by government of India? All of you okay? For example, you'll ask me, "Sir, give me an example." Very difficult to understand. Imagine you're a finance minister. 720, congratulations. You're finance minister now. I will come to you and I'll say, "Right, sir or madam, I want 1,000 crore rupees." Now, first question you will ask me, "Sir, why do you want 1,000? Please give me a breakup. Please give me a breakup." Right? Then I'll say, "Out of 1,000 crore rupee, I will use 500 crore rupee for construction of houses. Out of remaining 500 crore, I'll take 300 crore, provide, right, let's say drinking water facility for the houses. Right, out of remaining 200 crores, right, 500 plus 300, let's assume another 200 crore, I will take it and I will launch one more scheme. So now tell me, have I given the breakup of all the 1,000 crore rupee? Answer is yes. Now, second question you will ask me as a finance minister is, okay, sir, I allocated 1,000 crore rupee. Now tell me, what is the outcome you have achieved? What is the outcome you have achieved? That is, with construction of houses, what is the outcome you have achieved? Right? Are you able to reduce, right, let's say poverty in India? Are you able to ensure that people will have sufficient housing? Are you able to ensure people are able to get good quality, or let's say healthy drinking water facility? What is the outcome you have achieved? Please tell me that also. So that is basically the idea. Please understand, apply the same logic, the same housing logic that we have taken, apply it to the concept of outcome budgeting. And one is called as outcome budgeting, and second one is called as zero based budgeting. Right? Let me start with zero based, then I'll shift to outcome. What is this concept of a zero based? Right? What is this concept of a zero based? I'll take the similar example of a household. If you approach your parents, and, right, say, I'll take two examples here. If you approach your parents and say, last year you used to give me a pocket money of 1,000 rupee. Right? Understand this. Last year you used to give me a pocket money of 1,000 rupee, and this year let's assume inflation is 10%. So please give me pocket money of 1,100 rupee. Some of your parents might agree. Okay, that is example one. Although they might find it very difficult to understand what is inflation, some will understand, some will not. They will agree. Let's assume example one. Example two, you will go to your parents and you'll say, last year you allocated 1,000, this year, right? Now you'll say, last year you allocated 1,000, this year. By the time you complete your statement, your father will stop you and say, do not worry about last year. Ignore how much pocket money I gave last year. Ignore it. Don't even talk about it. This year, how much you want, for what purpose you want, you tell me. Is it okay? Second example, you are about to tell your parents, last year you allocated 1,000, this year, and your father says, stop. Don't continue. Don't tell me about last year. Tell me this year how much money you want, for what purpose you want. Now, what is the argument? Right? What is the idea here? Understand this very carefully. Whenever you consider last year's allocation, and based on the last year's allocation, you will decide allocation this year. This is called as incremental budgeting. Is it okay? Anybody has a problem with this? Let me know. I'll repeat it again. Whenever you consider last year's allocation, and using last year's allocation, you will decide your allocation this year. That is, let's say you're finance minister. You will say, last year I allocated 5,000 crores. I will increase it by 20%. I'll give you 6,000 crore rupee. That is called as incremental budgeting. On the other hand, you will ignore last year's allocation. You will not consider how much was done last year. Ignore it. It is of no use for you. Now, this year, you will decide to allocate based on the requirement of the ministry, based on how much minister is able to justify. For example, I will tell you, right, sir or madam, I want 500 crore. For construction of new roads. And I want 200 crore rupees for repairs of existing roads. I want 500 crore for construction of new roads, and I want 200 for repairs of existing roads. So now can I simply say, based on the requirements, based on how much the minister is able to justify, we would be allocating funding in the second example, not based on the past allocations. All of you okay? Second example, please look at second example. In the second example, based on how much is the requirement, we will allocate, not based on what was the past allocation. This is called as zero based budgeting. This is called as zero based budgeting. And why this is called as a zero based budgeting? Why this is called as zero based budgeting? If you are not able to justify how much money you want, the finance minister might allocate 0 rupees. If you're not able to tell finance minister for what purpose you want, no way, finance minister will not allocate any funding to you. So they would start with 0 rupees. Then they will say, okay, right, to 0 rupee, add 500 crore for new roads. For repairs of existing roads, add 200 crore. Hence allocate 700 crore rupee for the ministry. Now please tell me in example 2, right? Tell me in example 2, look at the example and tell me, is the allocation done? Is the allocation done in this year? Is it dependent on allocation done in the last year? Let me know. Is the allocation done in this year? Is it dependent? Is it determined based on allocations done in the last year or in the past? Absolutely no. Absolutely no. So in case of incremental, your past allocations are used as a base and we will increase or we will change it. On the other side, in zero based budgeting, we'll start with zero base. We'll start with 0 rupees. Now you will have to say you want 500 for new roads. I will add 0 plus 500. You will say 200 for repairs of the roads. I will add another 200. Beyond that, if you're not able to justify any allocations, I will not allocate anymore. I will simply say I'll allocate only 700 crores. Done? Can we go forward now? Now, please tell me, looking at both of these systems, please tell me which one do you think is better? Let me know, right? Looking at these two systems, tell me which one do you think is better? Is the first system better or second system better? Think logically. Please think logically. Can I say, sir, some of you do not think logically, Baba. Please think, no? Please think. Don't you think example 2 is a much better way to allocate funds compared to example 1? Compared to example 1, example 2 is a much better way to allocate funds. Why? Are you not holding the ministries responsible in the second example? Are you not asking for clarity from the ministry? The ministry says, I want 10,000 crores. Right? Imagine the minister says, you're the finance minister. Minister says, I want 10,000 crores. And you will ask the minister, why? And the minister says, last year you allocated 9,000 crore. Increase it by 11%, you will get 10,000 crore. Is it a right justification? Tell me, is it a right justification to allocate funds? Rather than that, minister will say, right, I need 10,000 crore rupee for A, B, C, as well as D. I want to do all of this. For that, give me 10,000 crores. So don't you think second one is always a better way to allocate funds rather than the first one? Answer is yes, by the way. Do not argue with me. Answer is yes. Many of you will say, but sir this, but sir that. Without having a justification, do not allocate funds. That's in simple terms what is the idea of zero based budgeting. Done? So zero based budgeting is this. Have a look at this. In case of zero based budgeting, every program is started at a zero base and every allocation has to be justified. If you do not tell me why do you want 10,000 crore, I will be there at 0. I will allocate 0 only. Now you will have to tell me why do you want 500? Why do you want 200? Why do you want 300? Why do you want 4,000? You will have to justify that. I'll start with 0. I'll keep on adding to that. Under this, each year's allocation is done independent of allocation done in the previous year. What was done last year? Immaterial. I will ignore it. I will look at how much money you want only this year. It will cover both existing as well as new programs. And finally, it will provide a mechanism using which government can use the resources much more efficiently. Zero-based budgeting is always better compared to incremental budgeting. All of you okay with this? Anybody has a problem? What is the objective? It will ensure that whichever task, whichever programs are important will be given a prerogative or will be given a priority. Not important ones can be pushed back. For example, you will ask me, sir, how is that possible? Let's say government of India does not have sufficient money. Let's assume government of India does not have sufficient money. If I use incremental budgeting, think of it and do let me know. Imagine government of India does not have sufficient money. If I use incremental budgeting, don't you think some of the schemes which do not have a major importance today might also be financed? Yes or no? Right? If you follow incremental budgeting, simply what was allocated last year, increase it this year. Some of the programs which have no importance today might end up getting funds allocated. And understand this, why this is a problem because government doesn't have sufficient money today, right? On the other side, if you go for zero based budgeting, and then you will say, right, imagine you'll say 0 rupee plus 200 crore for scheme A plus 100 crore for scheme B. Now can government of India say, let's not implement scheme B right now? Let's not implement scheme B right now. Why? This is not a priority for me. This is not a priority for me right now. Let's not implement it. That is possible. That's very much possible in case of zero-based budgeting. Allocations have to be justified. Every rupee that is allocated has to be justified. Wastage of resources will not happen. And because government is asking for justification, the authority which is implementing it will be very careful. Accountability will be very high. Government looking at these schemes, right, or asking for justification will be very, very high. Right? So I hope you understand these are the objectives with which zero-based budgeting has been implemented. In case of India, right, do we follow zero-based budgeting? In some of the years, in the past, we have followed zero-based budgeting. In the past, yes, we have followed in some of the years zero-based budgeting. Okay. So this is one zero-based budgeting. Now, I said there is a concept called as outcome budgeting. There is a concept called as outcome budgeting. Now, before I start telling you outcome budgeting, many of you will keep on asking me how zero-based budgeting is different from outcome budgeting. Tell me, explain it to me, etc. I'll give you an example. Please tell me which will come under what. Tell me. Right? We want to construct schools. We want to construct schools, and for this I will require and I will demand 500 crore rupee. Out of all the expenses, I want to construct schools, and for that I will demand 500 crore rupee. And now once I use 500 crore and construct schools, literacy rate will improve from, let's say, 65% to 68%. Is it okay? I'll repeat it again. Listen carefully. You're a finance minister. Out of all the expenses, out of all the expenses, I'm telling you, I want 500 crore rupee for construction of the schools. And once I use this and construct schools, literacy rate will improve from 65% to 68%. So now, is it okay if I say this is part of zero-based budgeting? This is part of zero-based budgeting, and this is outcome budgeting. This is outcome budgeting. Anybody has a difficulty even now? Let me know. Right? The first part is zero-based budgeting, and the second one is outcome budgeting. At least now all of you okay? Many students will keep on asking, tell me what do you mean by outcome, how it is different from zero-based. That is the reason I started with an example. You will purchase a polity book. You will purchase a polity book and show the expenses to your parents. That is zero-based. Right? But once you read polity book, your marks will improve from 70% to 80%. That is outcome. At least now all of you okay? At least now all of you okay? Right? So outcome means as a result of expenses. As a result of expenses, right, what has happened? As a result of expenses, what has actually been achieved? That is outcome based. Now, let me prove that particular point. Have a look at this table. Do not by heart the table. Please have a look at the table. Just have a look at the table. You will see column number 2, you will see name of the scheme or sub scheme. Column number 2. Right? Column number 2 is the name of a scheme or sub scheme. And column number 3, how much is the expected outlay? Outlay means how much money has been allocated. And column number 4, please look at column number 4. The output or deliverable against the outlay. Now, please tell me, can I say column number 4 will tell you what is the result? What is the result? What is the result of your expenditure? Is it okay? Please look at the columns. Column number 4 will tell you what is the result of your expenditure. Correct or wrong? Anybody has a problem? Let me know. Right? And please understand, some of you are saying both are same, etc., etc. My dear, how both are one and the same? You tell me how both are one and the same. Right? You will get the funding. You will explain the funding requirement for what purposes you want to use it. You will justify it. That is zero based. Once you will utilize the funds, you will achieve certain outcomes. You will achieve certain objectives. You will report that to government. That is outcome budgeting. So all the ministries will have to prepare a document. And submit it to government. That is outcome budgeting. That is for the funds that have been allocated, what they've achieved in the 1 year. What is the result of these expenses in the 1 year? They will have to report to the government. That is called as outcome budgeting. Okay, done. So beyond this, again, don't complicate all the things. These are very basic English terminologies. Zero based. Start with zero base, allocate funding. But because of these funding, what is the outcome? That is outcome budgeting. Okay. So budget expenses are presented in the terms of functions, programs, performances, which will reflect government output as well as the cost. In simple terms, under outcome budgeting, we are establishing a connection between the input as well as the output. We're establishing a connection between an input as well as the output. Under this, it establishes relationship between input as well as output. Budgets are developed based on relationship between both of them. It will enhance the visibility. Tell me now, Government of India very recently stated the poverty in India has come down. I don't know how many of you have read that newspaper article. Finance Minister stated the poverty in India has come down in recent times. Now, please tell me, is it not an outcome that is visible because of government expenses? Please do let me know. Will it not increase the visibility of government expenses? Because we as people, we as voters, we as customers, etc., we want to see the outcome. I'll give you another example. Let me know. I'll give you one more example. Very recently in the newspaper, there is an article which said the cost of logistics in India has reduced. Is it not a visible outcome because of government expenses? Correct? All of you okay? Is it not a visible outcome because of government expenses? Of course, yes. Right? So I hope you understand the idea of outcome budgeting is simple. We are trying to establish the relationship between an input as well as an output. And when the output is visible, to people, it will justify government expenses. It will simply improve the accountability of the government. Right? So visibility is right how government is translating its expenses into results. Right? In this, budget allocations are always measured in terms of outcomes, that is results, in terms of results. This is a concept of outcome budgeting. Anybody has a problem? Can we go forward now? Right? Gender budgeting, outcome budgeting, and zero-based budgeting. Anybody has a problem? Can we go forward? Okay. Now, how the budget is prepared? How the budget is prepared? And how the budget is prepared? Please understand. Logistics cost means transportation cost. No. Logistics, we have discussed earlier, I'll repeat it. Logistics basically covers various activities. Various activities whenever a product is moved, whenever a good is moved from point A to point B. For example, packaging, transportation, warehousing, all of these are part of logistics. How can we manifest every expenditure? My dear, you tell me. Can you estimate? And this is where reading newspapers becomes very important. Please tell me, can you estimate? Again, underline the term estimate. Can you estimate how much will be your expenses in the next month? I'm not asking you an exact number. Listen carefully. Can you estimate how much will be your expenditure in the next month? Of course, yes, you can estimate. Again, please understand, whatever is the exact outcome, whatever is the exact expenditure might vary. Every possibility is there, might vary. In the budget also, we are doing the same thing. We are estimating. We are simply estimating in the next year how much money I want to spend under subsidy, how much money I want to spend under infrastructure, how much money I want to spend here, etc., etc. Of course, yes, the numbers will change because the exact expenditure you do not know until unless you incur it. All of you okay? Exact expenditure you do not know until unless you incur it. That is a precise reason. And that's a precise reason. Very recently, I don't know how many of you have read it. I don't think so it was there in Hindu, but other newspapers. Government of India put forward certain demands for additional funding from the parliament or not. Very recently in the session, surplus funding, right? So government of India put forward demands for the other expenditures, additional expenses, because the argument is, in budget I thought I will spend this much. In budget I thought I'll spend this much. That was the estimate. But in reality, now I'm spending this much. I want additional funding. That is always a possibility. It generally happens. Okay, done. Can we go forward now? How the budget is prepared? How the budget is prepared? Simple exercise. Point number one, the Ministry of Finance, and specifically under Ministry of Finance, it is a Department of Economic Affairs. And within the Department of Economic Affairs, there is an office called as Budget Division. So it is a Ministry of Finance which is responsible for making budgets, union budgets. So step number one, they will send a circular. Circular means a document. Generally 5 months, 6 months before. 5 months, 6 months before. In case of India, it is already on the way. It is already on the way, right? Budget is being prepared now. So 5 to 6 months before the announcement of the budget, the finance ministry will send a notice, circular to all the ministries, all the departments. They will ask, they are seeking information from these ministries, these departments, how much funds they want, for what purpose they want, right? The requirements has to be given by these ministries. And now once the requirements are sent, once the estimates are sent for the Ministry of Finance, the finance ministry will hold consultations. Will hold consultations with all these departments, ministries, etc. And based on their requirement, based on how much money is estimated to be there with the government, how much they can borrow from the market, etc., etc. Now, finance ministry will prepare the document. Based on this, they will prepare a document, and this is basically the budgetary document, which will consist of all the expenses. This will consist of all the income sources, right, etc. Finance bill, appropriation bill, all of these will be prepared following this process itself. In fact, we are in the month of December. You'll come across it in a couple of weeks now. Generally, the exercise of budget preparation is concluded after holding a ceremony called as Halwa ceremony. UPC will not ask you this, but just for information, I'm telling you this. In the next couple of weeks, you'll come across a ceremony conducted by the Ministry of Finance called as Halwa ceremony. What does the halwa ceremony generally represent? Halwa ceremony represents the end of preparation of budget exercise. Are you able to understand the statement? I'll repeat it. Right, the end of preparation of budget exercise. Right, that is the preparation of the budget is done. Halwa ceremony represents it, and trust me, in the next couple of weeks you will come across it. You will come across it. Do not panic. You will come across it. Okay, so this is how budget is actually prepared by the government. Now, once the budget is prepared, then what is the exercise? We'll have a look at it, then we'll take a break. Some of you are asking, give me break. Just wait for some time. I'll give you break. First step is, right, with the permission of the President of India, the finance minister will present the budget documents on the floor of Parliament. And when I say floor of the Parliament, generally it is presented on the floor of Lok Sabha. It is presented on the floor of Lok Sabha. Once the budget documents are presented on the floor of Lok Sabha, for the next couple of days, generally 3 to 4 days, a general discussion is conducted in the Parliament. Right? What do you mean by general discussion? Understand this carefully. Whatever proposals are there in the budget, for example, 1 lakh crore rupee for scheme A, 5 lakh crore rupee for scheme B, etc. These individual proposals are called as a demand of grant. Is it okay? I'll repeat it again. There are individual proposals in the budget. What do you mean by individual proposals? For scheme A, 1000 crore rupees allocated. For scheme B, 2000 crore rupees allocated. For program C, right, let's say 10,000 crore rupees allocated. These individual expenses allocated is called as a demand of grant. During a general discussion, demand of grants are not discussed. What happens in a general discussion? Right, whether the budget is pro-poor, is the budget going to promote growth in the economy? Is the budget going to bring back, right, any black money into India? Is the budget going to help industries in India? These kind of general discussions will take place. Once the general discussion is done, now standing committees are formed. Right? I'm pretty sure in polity you have read about standing committees. There are more than 20 standing committees, department-wise. There are more than 20 standing committees. Now, all these demands of grants, I repeat, all these demands of grants will be sent to the respective standing committees. There is a standing committee for, right, let's say agriculture. There is a standing committee for civil aviation. There is a standing committee for industries. So whatever demands of grants are there for agriculture, they will be sent to the respective standing committee. So the standing committees will take up the demands of grants. They will study them and they will submit a report back to Lok Sabha. And once the reports are given, now there is a detailed discussion as well as voting done in Parliament. Again, when I say Parliament, starting with Lok Sabha, then it is sent to Rajya Sabha. So there is a detailed discussion. After that, voting will be done. Once appropriation bill is passed in Lok Sabha, it will be sent to Rajya Sabha and then sent to President of India. Same thing for finance bill. First discussed in Lok Sabha, then send it to Rajya Sabha, then send it to the President of India. So generally, this is the process that is followed in India's Parliament to introduce bills related to budget, pass them, and get the signature of the President, and then we'll start implementing the budget. Done? Right? So this is basically a political exercise. It is political exercise. Next is purely economics. Right? Let me take a break now. After the break, whatever we discuss will be purely an economic thing. Purely economic thing. You will not get this in polity. Okay. Now let me take a break. Before that, if there are any issues, let me know. We'll address it. Then we'll take the break. So can we also suggest NERCL like setup for NBFCs for or will it be non-viable because bad banks are not effective with bank itself? The NBFCs, if there is any NPA, they can drag the borrower to NCLT. That is allowed. Okay. Budget is already prepared in consultation with ministry. Why do they send them to standing committee? My dear, imagine I'm a minister, you're a finance ministry, And in the budget, we have decided we will allocate 50,000 crore rupees for scheme A. We have decided 50,000 crore rupee for scheme A. Now there should be somebody to evaluate whether this 50,000 crore rupee is it correct amount or not. In the sense, do I have sufficient documents as a minister? Have I submitted sufficient information to get 50,000 crore rupees? Right? Who will evaluate it? Who will justify it? It is done by the standing committee. Standing committee will ask for additional documentation, additional, right, let's say data to justify whether the allocations to you are justified or not. Okay. So deficit, is it method or deciding type of budget? My dear, deficit simply means there is a gap. Deficit means there is a gap. Gap between what? Gap between the expenses as well as the income. Okay. What are the reports that we have to study for exam? Again, there is no universal list for it. If there are any new reports which are published, read it. Any new reports which are published, read it. For example, many of you will ask me, sir, any kind of example that you can provide. Now check it. Please check it. In the last 1 month, did you people come across logistics performance index in the newspapers? May not be in Hindu, but yes, these were there in the last 1 month. Did you come across logistics performance index? Answer is yes, by the way. Did you come across skills India report? Skills India report? Answer is yes. So my argument is there is no fixed list, right? Do not be under the assumption that there's a list like this. I will by heart only this list and reports in the list. Absolutely no, right? That would be a blunder as far as I'm concerned. UPSC is very dynamic. Any report that is published in the newspaper, I would recommend, strongly recommend, advise, read it. Okay. So, sir, outcome budgeting should be more prominent than zero budgeting also. What do you mean by prominent here? Both are important. Both are important. Outcome, the ministry is telling the government what results we have achieved. Zero, government will ensure that whatever funds are allocated, they are justified by the ministers. Sir, in books, which chapter will cover budgeting exercise? As far as the NCERT is concerned and the Tamil Nadu board is concerned, these are the two books, these are the chapters. These are the two books and these are the chapters. And just to save your time, I know all of you are busy with UPSC preparation. Just to save your time, in Tamil Nadu board class 12th, chapter 9, I've even given the page numbers. Now, please do not go to the extent of asking which paragraph also. Right? Please do not ask me, tell me which paragraph within these pages are important. Right? I can tell you which pages to read. Read these pages. Right? Public debt is discussed in page number 190 to 193. Budget is discussed in 193 to 201. Finance Commission is there from 2001 to 201. Right? 201 to 204. Fiscal policy is there in 204 to 207. Right? So I can tell you. And NCERT macroeconomics, chapter 5 macroeconomics chapter, full chapter. Okay, so I can recommend to you which pages, right? To that extent, I can take you. Right? Now it is your duty. It is your duty to read, download, and start reading these particular books. Okay, done. Okay. Sir, if all time Indian government is running on deficit, always the Indian government itself is a huge liability. We'll understand that. Don't worry. Indian government has a deficit. Right? Government borrows every year. Government keeps on borrowing every year. Okay. Okay. When did India start following outcome budget instead of zero budget? Please understand, outcome budget is followed for many years now. The zero-based budget was followed during 1980s because during 1980s the situation was very bad for Indian economy. Right? The reserves that were there with the government, the money that was there was very limited. Right? We are facing a lot of issues. That is the reason here and there we have used outcome budgeting. So should I read only one book or both? My recommendation is read both. These are very basic books. These do not have very complicated concepts. These are having basic concepts. Read, right, both. But if you are finding so time is a big constraint for me, etc., then based on your requirement, pick one of them. Okay, done. So let me take a break now. We'll restart the discussion at 8:10. We will restart the discussion at 8:10. Right? Please join back. Okay, welcome back. Am I audible? Can we start now? Done. Thanks a lot. Let's start. So next, understand these concepts carefully. Last year, this question was asked in mains. Right? It was asked in mains. Straightforward question, very simple question. Whenever you talk about the budget, whenever you talk about budget, please remember this. Budget is divided into two parts. The budget is divided into two parts. What are these two parts? One is called as capital side of the budget or capital account. Capital account, and the second one is called as revenue account. Second one is called as revenue account. Now, before I start discussing what is capital and what is revenue, do not misunderstand the term revenue in this budget with common meaning of the term revenue. Commonly, that is for day-to-day usage, revenue means income. All of you will agree with me? Commonly, right? How do we use the term revenue in case of references or in case of talking? Revenue means income. But in the budget, in this budget exercise, do not misunderstand the term revenue for income. No, it is not equal to income. Please do not misunderstand. And whenever I use the term revenue account, revenue expense, revenue, etc., right? Do not say, sir, revenue means income, revenue means income. Do not keep on correcting me. Revenue basically will consist of all those transactions which are done by the government, which can be expenses, which can also be income. Is it okay? At budget means what? In budget, what we have? We have transactions of expenses as well as transactions of income. Correct? Basically, two types are there. Either it is income or it is expenditure. Instead of using the income, they will also use the term receipt. They will also use the term receipt. Now, please understand this very carefully. Whenever your income, that is receipt or expenditure, is associated with assets, I'll repeat the statement. Whenever your income, that is receipt or expenses, will lead to change in your assets or liabilities, we will call it as capital account. Anybody has a doubt? Anybody has a problem? Please do let me know. I'll repeat it again. Listen carefully. Whenever your receipts or your expenses will lead to change in your assets or liabilities, it is called as a capital account. I'll give you examples. Please do let me know whether this is correct or not. Government of India will sell a company owned by it. I repeat, Government of India will sell company owned by it. Is it going to change the assets held by the Government of India? Correct? Is it going to change assets held by Government of India? Yes. I'll give you one more example. Government of India will borrow from the market. Government of India will borrow money from the market. Is it going to change liabilities of Government of India? Again, answer is yes. Government of India will repay the loans. Government of India will repay the loans. Will it change liabilities? Yes. Government of India will invest in airport. Government of India will construct an highway. Government will spend money, construct a tunnel. All these examples that I've told you just now, are changing the assets or liabilities of government. So whenever any transaction, it could be receipt, it could be expenses, when they will lead to change in the assets or liabilities of the government, these will be classified under capital account. Best, right? The classification under the capital account is a capital expenditure, and capital receipts. Capital expenditure and capital receipts. All of you okay with this first classification or the part of capital account? Come to the revenue side. The revenue side will consist of all the expenses as well as the incomes which are not going to change the assets and liabilities of the government. These incomes or these expenses are incurred by the government in the day-to-day governmental activities. I'll repeat it. It is there in the slide. Don't keep on asking me, give me definition. It is there in the slide. I'll show it. The revenue account will consist of all the transactions which will consist of the receipts as well as the expenses which are incurred or which are collected by the government in the day-to-day governmental activities. And these will not change the assets or liabilities of government. This is called as a revenue account. Now the revenue account is further broken down into two parts. Same logic. One is called as revenue expenses, revenue expenditure, and the second one is called as revenue receipts. Revenue receipts. Can I give you examples now? Can I give you certain examples? Government of India will provide subsidies for poor people. Government of India will provide subsidies for poor household, poor people, right? Let's say agriculture subsidies, right? Food subsidies. Please tell me, if Government of India will incur subsidies for providing fertilizer, for providing free food grains to the people, is it going to change any assets or liabilities of the government? Is it going to lead to a change in assets or liabilities of the government? No, it is not changing any asset or liability. Neither it is adding to the asset, nor it is reducing the asset. Neither it is adding to the liability, nor it is reducing the liability. And other side, revenue receipts. I'll give you one example. Revenue receipts. Government of India will impose and collect income taxes. Government of India will impose and collect income taxes. Can I say government will collect income taxes? Neither the assets of Government of India will change, nor liabilities of the Government of India will change. All of you okay with these examples? I'll give you more examples, but some, at least one you remember, because suddenly UPSC will ask you a question. You should know some examples. Can we go forward? Can we go forward? Subsidy will increase liability, my dear. Please understand. Borrowings will increase the liability. Borrowings will increase the liability. Subsidies are expenses. No doubt government might borrow and spend money, but look at the transactions I'm talking about. One side, government will take money. That will increase the liability. But on the other side, how do they spend it? That is left to the government. Right? So do not confuse. Sir, they will take money and spend. And is important. When they will take money by issuing government bonds, I repeat, when government will issue a government bond, can I say liability will automatically increase? All of you okay with this? If government will issue a government bond, can I say liability of Government of India automatically will increase? Just by spending money, does it guarantee that liability will increase? Please think of it. Please think logically always. So now come back to the explanation part. I'm talking about the receipt side. Let me start with the receipt side now. Receipt means incomes. So receipts are two types. One is called as a revenue receipt. Second one is called as a capital receipt. What do you mean by revenue receipts? Revenue receipts are those incomes which are received by the government from all the sources during day-to-day governmental activities, during ordinary course of governance. These receipts do not create a liability or lead to creation of assets for the government. These receipts do not create a liability nor add to the assets of the government. Let me give you certain examples. Please look at these. Please look at these and tell me any of these revenue receipts. Any of these revenue receipts. Please look at all of them. Let me know if any of these revenue receipts are adding to the liability of Government of India, or is it changing assets of Government of India? Right? Direct taxes, indirect taxes, are they adding liabilities to the government? Are they changing, right? Let's say assets of the government. Government will collect income tax. That's it. That's a transaction I'm talking. Please be very careful, because some of you will simply complicate everything. Now you will say, sir, government can collect income tax. Use the income tax to construct road. So it is adding asset. I am not talking about that transaction. My question is simple. Government will collect income tax. Does it mean asset is added? Let me know. Government will collect income tax. Does this mean asset is added? No. Does this mean liability has changed? Absolutely no. So do not complicate these things. Keep it simple. Only one transaction. Okay. So direct taxes, indirect taxes, dividends. Now many of you will start asking me, what is dividend? Tell me, you have not discussed. Earlier we have discussed it. I'll repeat it. The owners, the shareholders of a company, I repeat, owners or shareholders of the company are given part of the profits. That part of the profit is given to the owner. It is called as dividend. Right now, tell me, is Government of India having certain ownership? Does Government of India have shares in the companies in India? Can I give you examples? What about public sector enterprises? Right? Public sector enterprises. So public sector enterprises are owned, more than 51% ownership is there with the government. What about RBI? Ownership is there with the government. So profits will be given to the government because it is the owner, that is called as dividend. So dividends, right, are part of revenue receipts. Part of revenue receipts. Okay. Interest receipts. Government has given a loan. Government has given a loan. Interest on the loan. Please be very careful. Many of you keep on complicating all of these things. Interest on the loan. You give a loan, you collect a loan. That is asset. Interest on the loan is not asset. It is income. Right? So during the day-to-day governance, interest receipts are counted as part of revenue receipts. Fees and fines. For example, you will apply for, let's say, passport. You will apply for a driving license. Will you pay certain fees? And in case of day-to-day governance, can Government of India impose fines at various places and collect fines? Right? So fees and fines, revenue receipts. And external grant. External grant. Now, what is this concept of external grant? Let's say World Bank. World Bank will provide a grant to the government. And many of you will ask me, sir, what do you mean by grant here? Listen carefully. When the World Bank will provide a loan, they will recollect the loan. Loan means repayment is there. Grant means no repayment. All of you okay? Can I go forward here? All of you okay? Right? Loans, there is a repayment. Grants, there is no repayment. There is absolutely no repayment in grants. One-sided transactions. Right? So World Bank will provide a grant. United Nations might provide a grant. Any other international agency might provide a grant. Because it is coming from outside India, I'll call this as external grant. And because external grants are not creating any liability, it is not adding to the liability, I'll put it under the part of revenue receipts. Done. So these are types of revenue receipts. Okay. Now come to the concept of capital receipts. Come to the idea of capital receipts. These create a liability or reduce the assets of the government. The capital receipts will either add to the liability of the government or will reduce the assets of the government. These are obtained by the government by raising funds through borrowings, recovery of loans, selling of the asset, etc. Let me show you certain examples. Capital receipts, recovery of loans. Imagine Government of India has given loan of 500 crore to the state government. They will recollect 500 crore rupees. That is a capital receipt. Recovery, right? Recovery of loans, capital receipt. Disinvestment. What do you mean by disinvestment? Government selling ownership of its companies. Disinvestments is nothing but government selling ownership in its companies. So now please tell me, I'll give you a very recent example. Government of India sold Air India. Government of India sold Air India and got certain amount of money. Can I say this is a disinvestment? Let me know. Can I call this as a disinvestment? Selling of ownership, right? When government will sell ownership, it is called as disinvestment. So when government will sell ownership, collect money, it will reduce the asset. That is a capital receipt. That is capital receipt. And the third one is government borrowings. Government will take a loan from, let's say, international organizations, World Bank, right? Let's say government will take a loan from World Bank. Government will take a loan from New Development Bank. Government will issue G securities, borrow from the market. Can I simply say borrowings will create liabilities? Hence, I'll keep it under the capital receipt. Done. So one is revenue receipt, second one is capital receipt. Can I go forward? Is there any problem? Tax is a liability of citizens and assets of tax is a liability of citizens and assets of government. Please tell me where it is written tax is asset of the government. Let me know where is it written. Which book has told you tax is the asset of the government? Let me know. Right? Tax is not asset. Tax is a source of income for the government. Okay. Do not complicate these things. Right? Some of you keep on trying to complicate everything that I discuss. Interest, receipt, and recovery of loans are same. No. No, both are not same. When you pay interest, is it same as paying principal? Let me know. When you pay interest, is it same as paying principal? Where is it written? Where is it told? Where it is told to you in my classes? Point it out. Interest is different, principal is different. If you give, let's say central government will give loan to the state government, annually state government will give interest. And once the maturity period is over, state government will repay the loan. Let me clear it up with another example. All of you remember your friend? Let me know. All of you remember your friend? Right? Come back to your friend now. Imagine I'm government of India. I will issue this and take 100 rupee from you. Loan, borrowing. All of you okay with this? It is nothing but a borrowing from you. Now, please tell me, if I give you 6% interest every year, if I give you 6% interest every year, does it mean I'm repaying the loan? Or at the end of third year, I will return your principal. I will call that as a repayment of loan. You think of it now. You please think logically, you will understand it, right? So incomes, please understand interest. Interest is always a part of revenue. It is always part of a revenue. Either it is interest paid by the government or interest received by the government. It is always part of revenue. Whereas loans taken, loans given, right? It becomes part of capital. Okay, now let me go forward. Simplify it. Do not complicate the things. Simplify it. Please understand this very carefully. I'll start numbering them or I'll start using alphabets so that you understand. Let's say I'll call this whole revenue receipt as number 1, recovery of loans as number 2, disinvestment as number 3, and borrowings as number 4. Listen very carefully now. Very carefully. Look at number 1, number 2, and number 3. On one side, keep it on one side. And look at number 4, keep it on the other side. Can I say out of all the 4, 1, 2, 3, and 4, only in case of fourth one, there is a liability created for government? I'll repeat it. Keep 1, 2, 3 on one side. Keep number 4 on the other side. Can I say only in case of fourth one, there is a liability created for the government? Whereas 1, 2, and 3, government will simply collect money. Right? These are simple receipts for the government. So I'll use a classification now. I'll write 1, 2, and 3 as non-debt creating receipts. Non-debt creating receipts. All of you okay with this? I'll say 1, 2, and 3 are non-debt creating receipts. Whereas I'll say fourth one is debt creating receipt, or to be more precise, debt creating capital receipt. Debt creating capital receipt. I'll divide this further. I'll divide the first one further. I'll say 1. Let me see. Okay, 1. 1 is non-debt creating revenue receipt. 1 is a non-debt creating revenue receipt, and 2 and 3. 2 and 3 are non-debt creating capital receipts. Capital receipts. Now please tell me, anybody has a difficulty? These are technical terms. Suddenly UPSC can ask you a question in the prelims on this. Suddenly UPSC can ask you a question in prelims on this. So 1, 2 and 3 are non-debt creating receipts. These are incomes which do not create a liability. 1 is purely a non-debt creating revenue receipt. Whereas 2 and 3 are non-debt creating capital receipts. Fourth one is a debt creating capital receipts. That is, today it is an income, part of income for you, but in the future it will create a liability. In future you will have to repay it. Right? So this is basically the concept. This is basically a concept on the receipt side. Expenditure is very easy. Receipt side, this is basically the concept. Now let me go forward. Expenditure side now. Let me go forward. Expenditure side. Again, just like receipt, I will divide expenditures also two parts. One is a capital expenditure. Second one is revenue expenditure. Revenue expenditures are those expenditures which are incurred by the day-to-day, incurred during the day-to-day governmental activities, and these expenditures do not result in the creation of assets. These do not create any kind of assets, right? These are not associated with assets whatsoever. On the other side, capital expenditures. These are the kinds of expenditures which are incurred by the government, which will lead to change in the assets as well as the liabilities. That is, in simple terms, capital expenditure will either increase the asset or reduce the liability of the government. Will either increase the asset or will reduce the liabilities of the government. Right? Let me give you certain examples. Here. Start with capital expenditure. And in the newspaper, if you're reading, rather than using capital expenditure, they will simply use the term capex. Rather than using full term capital expenditure, they will simply use the term capex. Capex is a short form of capital plus expenditure. Capital expenditure such as expenditure on road construction, expenditure on tunnel construction, expenditure on airport construction, etc. Second, repayment of the loans. Repayment of loans, right? The loans are repaid by the government, reduces liability. The government will recollect the loans. Loans are assets, right? The assets have increased, right? So basically the capital expenditure. Come to the other side, revenue expenditure. Right? Examples, expenditure incurred on law and order. Again, when I say law and order, salaries paid to the government employees, salaries paid to, let's say, the policemen, etc. The salaries which are paid in the defense expenses, interest payment, right? Loans have been taken, interest is paid by the government on it. Subsidies which are given, right? Subsidies which are given by the government, welfare payments. I'll give you an example. Please do let me know. Indira Gandhi widow pension scheme. We have seen that example. That's the reason I'm taking it here. Indira Gandhi widow pension scheme, right? Don't you think that's a subsidy, a type of welfare payment, right? That will not create any kind of asset or liability. Okay. So pension payments, pension schemes are also there for Government of India. Now, last one is typical. Let me explain. Last one is slightly technical. Let me explain. I'll start with an example. Look at it very carefully. Central government will use the money that is there with itself, spend the money and develop infrastructure. Okay, example one. Central government has money
will directly spend money and develop infrastructure. Central government will provide the money, will give the money, grant, let's say, to the state government. The state government will use the money for development of infrastructure. For development of infrastructure. Example 2. At least looking at the examples, I hope all of you have understood both are different. At least looking at the example, I hope all of you have understood both the examples are different. Don't say both are one and the same. Absolutely no. Why? In the example 1, central government is directly spending money and developing infrastructure, capital assets. In the second example, government is simply giving money. Government is not creating asset. Center is not creating asset. Government is simply giving money to the state. State is creating capital asset. Or another authority is creating capital asset, not the central government directly. So now can I simply say in the second case, no doubt, I repeat, no doubt, capital asset is created, but it is not created by the central government. But the expenditure for it is incurred by the central government. So this one, I'll call this as grants for creation of capital assets. Second one, I'll call it as center's grant for creation of capital asset. The reason why it is kept under the revenue side is this asset which is created is not the one created by the central government. Center has not created it. Some other authority, the state government, they have created the asset. Hence, this expenditure that is allocated by the government will be called as grant for creation of capital asset. And because center doesn't own the asset, we will keep it under the revenue side. Can I go forward now? Everybody is okay with this? Can I go forward? Right? Everybody is okay with what is the revenue side, what is capital side? How do you understand what is revenue side, what is capital side? If at all a question is asked in UPSC prelims, will you be able to differentiate revenue side or capital side? So please be very careful. Please be very, very careful. And these are the kind of questions which have been asked. Right? These are the kind of questions which have been asked in UPSC prelims. Now let me take all this knowledge and start discussing concepts of deficits. Concepts of deficit. Now, please understand, I've written 6 types of deficits. I've written 6 types. 1, 2, 3, 4, 5, and 6. Although I will discuss 6 types of deficits, in the documents or in the budget discussion, if you have seen, you will not see all the 6. Why? Today we do not calculate 5th and 6th. Today we do not calculate 5th type of deficit and 6th. Why, you will understand in some time. Next year, when the budget is announced, observe it. Just observe it. In fact, I'll show it. This year's budget, I'll show it now. Government will not give you data regarding 5 and 6. Government will give you data regarding only 1, 2, 3, and 4. Let me prove it. Please look at this picture now. Please look at this picture. Right? Do not worry. Right? Don't start by hearting the numbers here. Not at all needed for UPSC exam. All of you are okay. Right? You can see only 4 types of deficit. Let me know. And if I'm wrong, please do correct me. You can see only 4 types of deficit. And if you have read yesterday's newspaper, Hindu newspaper for that matter, did you come across this number in Hindu newspaper? Tell me, did you come across this number in the Hindu newspaper? And by the way, those who are wondering, sir, where it was there in Hindu newspaper? First page. First page. Fiscal deficit of Government of India, which is targeted at 5.9%, it might actually become 6%. That was the gist of the article. Target is 5.9, but it might actually become 6%. That was being discussed in the newspaper. Anyways, you'll understand what is the meaning of it now. So you can see fiscal deficit, revenue deficit, effective revenue deficit, as well as primary deficit. Only 4 types of deficits are published. 5th and 6th, we do not calculate. We have discontinued that. But what is the meaning of all the deficits? Let's start. First one, most simplest, most easiest, revenue deficit. It is basically the difference between the total expenditure as well as the receipt under the revenue head. Under the revenue head, whenever the expenses, again revenue head, under the revenue head, whenever the expenses are greater than the receipts, that is called as the revenue deficit. And always remember this, whenever you talk about deficits, it is given as a percentage of GDP. It is given as a percentage of GDP. For example, let's take a simple example. Imagine your revenue expenditure is 100 crore rupees, and your revenue receipts is right, let's say 70 crore rupees, which means, can I directly say revenue deficit in this example is 30 crore? Revenue deficit is 30 crore rupee. But rather than saying 30 crore rupee, what generally the government documents will tell you is 30 crore is the deficit, and let's say hypothetical numbers, by the way, let's say 300 crore is your GDP. Let's say 300 crore is your GDP. So can I now say your revenue deficit is 10% of GDP? All of you okay with this? Revenue deficit is nothing but 10% of GDP. So always remember this. Rather than giving you the numbers, the absolute numbers, difficult, they will give you in terms of percentages. Now, having higher revenue deficit is always a cause of concern. Come to the points now. These are conceptual points, understand them. Having a very high revenue deficit or increasing the revenue deficit is always a cause of concern. Why? Whenever you have revenue deficit, it means you're falling short of your income. Compared to your expenses, you are falling short of income, which means 30 crore rupee in this example. Look at the example. Can I say 30 crore rupee in this example? You will be forced to borrow from the market. All of you okay? Right? Is the logic okay or not? You will be forced to borrow from the market. Now, the golden rule in the economy, the golden rule in the market is, whenever you will borrow from the market, do not use it for revenue side. Do not use it for consumption purposes. Use it for capital. Use it for asset creation purposes. That is, if government will borrow 500 crore, we better use this, right, as much as possible out of 500 crore. We better use this 500 crore for asset creation purposes. Do not use it for revenue purposes. Why? The reason being, asset creation will always add to the economy. Asset creation will always add to the economy. Whereas providing welfare payments or subsidies, these are problematic. These are problematic, right? For example, have you heard of Revdi culture? Correct or not? Revdi culture, right? Very recently, this has started becoming very famous, right? The prime minister keeps on right harping on this particular point. Do not focus too much on populism. Do not spend too much of money on providing subsidies. Do not provide freebies to the people, etc., etc. Why that's a problem? You might become popular by providing freebies, no doubt. Any government will become very popular by providing freebies. But please tell me, is it creating asset? Is it contributing to the growth in the economy? Or to put it in a much better way, by providing welfare to the people, by providing so many freebies, the kind of impact that will be creating will be lesser compared to creating assets. All of you okay? Right? For example, by providing subsidies, yes, no doubt, you might get elected again and again. But by using a similar amount of money, can you create very good road infrastructure in India? Can you create very good agriculture, warehousing infrastructure in India? Can you create very good hospital infrastructure in India? Answer is yes, by the way. Right? That is the argument. Create infrastructure, invest under capital, do not borrow, and invest under the revenue head. All of you okay with this? So now tell me, right? We'll discuss FRBM after some time. Now tell me, if one of the documents of Government of India will give you a target of RD is equal to 0%, does it make sense to you or not? If the government of India will target RD is equal to 0%, does it make sense to you? Why should we reduce RD to 0%? It simply means, right, the revenue side, whatever income you have generated, it is sufficient to take care of your day-to-day expenditure. Is the logic okay? Right? Whatever income you are generating, it is sufficient to take care of your day-to-day expenses. That should be the situation. Okay, so that is the revenue deficit. Let me go to the next one. Effective revenue deficit, ERD. Effective revenue deficit is nothing but ERD. Now, what is this effective revenue deficit? Start with the basics. Please start with the basics. Come back to this table. Right, let's look at this table. Whenever you calculate revenue deficit, what do you write? Revenue expenditure minus revenue receipts. Revenue expenditure minus revenue receipt. That will give you revenue deficit. But please look at one component in the revenue expenditure side. Please look at one of the components in the revenue expenditure side. That is the last one. Grants for creation of capital asset. Whenever you talk about revenue, what do we say? Under revenue, we are not creating any assets. Correct. Under revenue, we are not creating any asset. There is no change in the assets. But to be very precise, when you talk about the grant for creation of capital asset, center is not creating asset, but is there asset creation because of GCCA? Let me know. I'll repeat it again. Right? If you look at the revenue side, we say there is no asset creation, no change in the asset. And if you look at grant for creation of capital asset, no doubt, center is not creating asset, no doubt. But is it okay if I say ultimately there is creation of asset? So that is argument. Experts say revenue deficit is not appropriate. Revenue deficit does not tell you a clear picture. That is the reason a much better version has been introduced, effective revenue deficit. And what is adjusted in the effective revenue deficit? What should we do to get effective revenue deficit? Whatever is the investment, whatever is the grant provided by the government for creating asset, we will subtract it. We will simply take it out of revenue expenditure. Reason being, no doubt, center is not creating this. No doubt, center is not creating it. But ultimately, this money will lead to creation of asset. That is the reason. So have a look at the formula for effective revenue deficit. All of you are okay with the formula for effective revenue deficit? Revenue deficit minus grant for creation of capital asset. And if you have a doubt, it is in simple terms like this. I've written it directly. That is ERD. I will write it like this. Revenue expenditure minus grant for creation of capital asset minus revenue receipt. At least now all of you okay. Effective revenue deficit, revenue expenditure, but in revenue expenditure, there is a component which is used for creation of asset. I will subtract it and I'll write as usual, revenue deficit means minus revenue receipt. So now, can I write it the same formula? Same formula, can I write it like this? Revenue expenditure minus revenue receipts minus grant for creation of capital asset. Anybody is confused? Sir, formula number 1 and formula number 2 are different. Anybody is confused? It's like writing 10 minus 1 minus 3. Same, I will write it as 10 minus 3 minus 1. Absolutely no difference. Plus or minus, you can keep on changing like this, right? Nothing will change. So now tell me revenue expenditure minus revenue receipt. Can I write it as revenue deficit? And a grant for creation of capital asset, I will write it as GCCA. So effective revenue deficit is equal to revenue deficit minus GCCA. All of you okay? Now can I simply say effective revenue deficit is a better quality indicator compared to revenue deficit? All of you okay with this? Effective revenue deficit is a better quality indicator compared to revenue deficit, because in revenue deficit we have considered certain expenses which were used for creation of asset. But in effective revenue deficit, we have removed that also. Right? That is ERD. Come to the third one, fiscal deficit. Straightforward. Fiscal deficit. Fiscal deficit is nothing but market borrowings. Fiscal deficit is nothing but borrowings of the government. Rather than saying market borrowings, I'll write borrowings of the government. Please look at the formula and tell me yes or no. Please look at the formula at least now. Total expenditure is what? Total expenditure is revenue expenditure plus capital expenditure. Correct? No problem in expenditure. Revenue expenditure plus capital expenditure. And your non-debt creating receipts, if you remember earlier the numbers that we have used, your non-debt creating receipts are 1, 2 and 3. Now please tell me, if your total expenditure is 100 crore and your income non-debt creating receipts are 80 crore rupees, can I directly write 20 crore rupee will be your borrowing? Anybody has a problem with this? Let me know. Right? Again, I'm using numbers 1 to 3. If you're asking, sir, from where did you get this 1, 2 and 3? This is what I'm talking about. This is the 1, 2, 3 number that I'm talking about. Non-debt creating receipts. If your total expenses are 100 crores and you're earning, right, through revenue receipts, recovery of loans, as well as a disinvestment, let's say 80 crore, don't you think automatically now you will have to borrow 20 crores so that you will have total 100 crore rupees to spend in expenditure? Everybody is okay? Anybody has a problem? Anybody has a problem with this? Right? You're earning 80, your expenses are 100. So what is left out? 20 crore, that is your borrowing. I'll write, right? Borrowings is nothing but fiscal deficit. All of you okay? Can we go forward? Borrowings of the government is nothing but fiscal deficit. This year, government will borrow, fiscal deficit. Next year, government will borrow, next year's fiscal deficit. Last year, government borrowed, last year's fiscal deficit. Next one, primary deficit. Slightly technical, but very, very important. Listen to me very carefully. If you read a book, they'll simply write it as primary deficit is equal to fiscal deficit minus interest payment. Understand the technicality of it. Primary deficit, they will write it as fiscal deficit minus interest payment. But what is the meaning of primary deficit? What is the meaning of primary deficit? Understand this very carefully. What if I say the income that is generated from you? Understand, I'll go point by point. Understand this carefully. What if I say the income that is generated by you this year, it is sufficient for you to take care of expenses this year? First statement, understand these statements carefully. Once you understand, we'll come back to the primary deficit. Point number 1 is what? This year, you are earning money. This year, you are spending money. You want to construct road. You want to launch a scheme. You want to repair certain airport. Right? So my argument is the income that you have generated, it is sufficient. It is sufficient to take care of expenses on various projects, various schemes, etc. that you have planned for this year. This is point number 1. Point number 1. What if it is not sufficient? Simple point. What if it is not sufficient? If it is not sufficient, what you will do is, now you know expenditure is greater than income, you will go to the market and borrow money. All of you okay with this? You will go to the market and borrow money. And this borrowing is nothing but fiscal deficit. This borrowing is nothing but fiscal deficit. Point number 2. Point number 3. Slightly enter into technicalities. Whatever expenses you incur this year, whatever expenditure you incur this year, understand this carefully. These expenditures can be classified like this. That is expenditure incurred for all the programs, all the expenditures, all the subsidies that you have planned for this year, plus the interest payment plus interest payment. Is it okay with all of you? Right? Whatever money you are spending this year, can I say that money can be divided into two parts? One for interest payment. Second one, you want to launch a scheme. You want to construct airport. You want to repair roads. Remaining will be all these expenses that you have planned only for this year. Now look at interest payment. Look at interest payment. Can I say interest that you pay this year is because of your borrowings done in the past? Let me know. I'll repeat it again. The interest payment that you're doing this year, it is because of your borrowings done in the past, which means out of your expenditure, some of the expenses is because you have done something in the past. It is not because you're doing something now. Right? For example, let me give a number so that you understand. Out of total 100 rupee that you are spending, let's say you'll spend 80 rupees on construction of a road this year. On construction of a road that you do this year. And remaining 20 rupees, you will pay interest. So now can I say 80 rupees is for your activities done in this year and 20 rupees is for something that you have done in the past. Anybody has a problem? Anybody has a problem with this? Now, why this is so important? Why this is so important? Imagine this, you will borrow money. You will borrow money to pay for interest payment. Imagine this, you will borrow money to pay for interest payment, which does, right? What does it mean? Let me give you the inference. What does it actually mean? If you borrow money in the market only to pay for your interest payment, does it not mean that the amount you are generating this year, income that you are earning this year, it is sufficient to take care of your this year's expenses? I'll repeat it, slightly technical, but once you understand such a very beautiful concept, I'll repeat it, understand this very carefully. This year, you want to spend 80 rupees on road. Let's take only one expenditure, okay? 80 rupees on road, 20 rupees for interest payment. So your total expenses this year is right 100 rupees. But you generate a sufficient revenue of 80 rupees. You generate sufficient income of 80 rupees to take care of your this year's expenses. Whatever planned expenses you have this year, you have generated sufficient amount of income. And only for borrowing, only the borrowing that you have done, the 20 rupee borrowing that you have done, you will use it for interest payment. Now, does it not mean that your finances are efficient enough? Right? The sources of income that you have this year are sufficient enough for you. Does it not represent a very good financial position of the government? All of you okay? Because some of you will simply say, sir, instead of 80 rupees, I should have earned 100 rupees. Instead of 80 rupees, I better earn 100 to take care of interest payment. But that is a hypothetical situation. Very difficult to earn 100 rupee when you are having expenses of 100. I hope you understand this. In India, the fact of the matter, I repeat, in India, the fact of the matter is government borrows. Government borrows. But now the question is the government borrowing to take care of current year activities, or is it borrowing because it has borrowed in the past and they want to use it for repayment? That is the importance. I hope you understand. That is the important point. I'll give you another example, right? Look at it and do let me know. Example 1, government will borrow 100 rupees. Government will borrow 100 rupees. Out of 100 rupees, 90 rupees will be used for interest payment and 10 rupees will be used for taking care of expenses this year. Example 2, government will borrow 100. Out of 100, they will use 40 rupees to pay for interest payment and they will use the remaining 60 rupees to take care of current year expenses. Now, please do not look at do not look at interest payment and say, sir, interest payment has come down, so it is good. That is not the focus here. Please look at 10 rupee and 60 rupee. So now can I say, please look at it and let me know. Now can I say, under example 1, government is able to generate more income compared to example 2 to take care of current year expenses. Please think logically, right? Again, I'll repeat it. Look at both of the examples. Can I say, under example 1, government is able to generate more income to take care of your current year expenses compared to example 2. That is the concept of primary deficit. That is the importance of primary deficit. What is primary deficit? Primary deficit represents primary deficit represents, in terms of formula, fiscal deficit minus interest payment, which means, can I define it like this? How much part of the borrowings done this year is being utilized to take care of expenses this year. Is it okay? I'll repeat it. What is primary deficit? How much part of the borrowings done by the government this year is being used to take care of current year expenses. That is called as primary deficit. Now, based on this, you people tell me, you think of it and do let me know, should the primary deficit be higher or should the primary deficit be lower? What is preferable? Should the primary deficit keep on increasing or should the primary deficit keep on decreasing? Primary deficit should decrease. Some of you are saying higher. My goodness. Some of you are saying higher even now. Why? It should be low, my dear. It should be low. Your dependence on borrowings to take care of your current expenses should be lower. Does it make sense or not? I'll repeat it again. Your dependence as a government, your dependence on current year borrowing should be lower to take care of your current year expenses. And those who are in doubt, you are confusing between current year expenses and expenses for having done something in the past. The interest payment is an expenses. It is an expenditure, but it is an expenditure that is done because you have done something in the past. All of you will agree? Let me know. Your interest payment is an expense, no doubt, but it is done because something you have done in the past. Whereas 60 rupee on the road, you'll spend this year 60 rupee on the road. Can I say this 60 rupee is a current year expense? At least now all of you will agree. So now tell me, should you borrow to take care of your current year expenses more and more, or to take care of your past expenses? So borrowings, whatever borrowings are there, if you are using more of it, if you are using more of the borrowing to take care of your current year expenses, it simply means in this year, your income position is low. Your incomes are low. That is the meaning. Right? All of you okay? Right? Otherwise, simply by heart, primary deficit should be decreasing. Primary deficit should be decreasing, not increasing. Primary deficit should be decreasing. Right? Why? When it decreases, what does it mean? You're borrowing, but borrowings are not done to take care of your current expenses. It is done to take care of your past expenses. And that is the reason. Have a look at the graph here. Please look at the graph. Do not worry about by hearting. Is it okay? During pandemic, observe now. During pandemic, is it okay if I say a large amount of borrowings that was done by Government of India, or part of the borrowings that was done by Government of India, how much of it we started using for current year expenses went up? Observe the graph. Please observe the graph, and it makes perfect sense. Look at these particular 2 years, 21 and 22, right? You will realize that the fiscal deficit has increased. So has been the increase in primary deficit. Correct? Fiscal deficit, FD has increased. PD also has increased. Why? What is the reason? Why has it happened? A reason being, during pandemic, can I say, incomes collected by the government went down. Correct? Incomes collected by the government went down, were affected. And now expenses were very, very high. Expenses were very, very high. So government borrowed heavily. But large part of the borrowings now, government started using it for current year expenses, because the income position, revenue position of the government during Corona, during pandemic period was weaker. At least now all of you okay with this? All of you okay with this? Right? So all these are technical concepts. Please be very careful. You can read any number of books for GS paper 3. They will not discuss why PD is important. Now you tell me, between FD and PD, PD being primary deficit, between FD and PD, can I say PD is much better quality indicator? Correct? Between FD and PD, PD is a much better quality indicator. PD will tell you how strong or how weak your income position is in a particular year. FD will simply tell you borrowings. FD will tell you how much money you are borrowing, but PD can tell you how much money you are borrowing, and out of that, how much money is for interest payment, how much money is for current year expenses. That is the reason. Please remember this. PD is a much better indicator compared to FD. Okay. Now, two more concepts are left out: monetized deficit and budget deficit. Let me pause. Because first four are important. First four are calculated. Let me take up questions. If we complete questions, I'll go back to deficits, complete the remaining two. Right. Let's start solving the questions now. Let's start solving the questions. Okay, start solving now. Okay, 58% have answered correctly. Conceptual questions. The money multiplier in an economy increases with which one of the following? Increase in CRR and increase in SLR. Please tell me how increase in SLR and CRR will increase money multiplier. How? You please tell me. We have discussed all of this. If you increase CRR and increase SLR, money multiplier will not increase, rather decrease. Money multiplier will rather decrease. Money supply will come down if you increase CRR and SLR. Right? So A and B are wrong. Increase in the habit, banking habit of the people. People will deposit more and more money. If people will start depositing more money, don't you think because of fractional reserve system, M3 will increase? Go back to the idea of money aggregates. If people will continue, or will if people will practice depositing more money, right, in the banking sector, because of fractional reserve system, M3 will increase. And if M3 increases, money multiplier automatically increases. C is correct. Increase in the population of the country doesn't guarantee increase in the money supply. Right? Money multiplier will not increase just because population has increased. Option C is the right one. Okay, next one. Okay, 36% have answered correctly. Why? What seems to be the issue here? In India, the central bank functions as a lender of last resort, usually refers to which of the following? Lending to trade and industry bodies when they fail to borrow from other sources? No. Please tell me, in the discussion regarding RBI, did we discuss anywhere RBI giving loans to industries? No, RBI doesn't deal directly with industries. RBI always deals with banks. Second one, providing liquidity to the banks having temporary crisis. Whenever bank is facing certain emergency, they can always approach RBI, borrow from RBI. Correct? Absolutely correct. Second one is correct. Lending to governments to finance budgetary deficit. Please tell me. Did we discuss this? Did I say RBI lends to governments now? Please do let me know. Did I ever say RBI is now lending to government of India to take care of budget deficit? Absolutely no. No, earlier we used to do that. Earlier we used to do that. And moreover, please remember this. Please remember this. RBI is called as a bank of last resort. Bank of last resort because banks can approach RBI. Because banks can approach RBI in emergency. Right? Always remember this. That is the reason why RBI is called as a bank of last resort. So only second statement is correct. Right option for the question is option B. 2 only. Next question. %54 have answered correctly. The governor of RBI is appointed by the central government. Straightforward. Factual question. Correct. Certain provisions of the Constitution of India give the central government right to issue directions to the RBI in public interest. No, it is not there in the Constitution of India. It is there under RBI sections. RBI Act of 1934. Statement 2 is wrong. The governor of RBI draws his powers from RBI Act. Straightforward. Of course, yes, because the position of governor of RBI comes from RBI Act. So all the powers, functions, responsibilities will also come from RBI Act. Right? So third statement is correct. So 1 and 3 are correct. Right option for the question will be option C, 1 and 3 only. Again, same question, we can make it difficult. I hope you understand. Same question, the difficulty can be increased. How? Rather than saying 1, 3, 1, 2 like this, can I use a new type of options? Only one statement is correct. Only two statements are correct. All three statements are correct. And none of the statements are correct. That also can be done. That will increase difficulty. Here, sometimes you can use elimination. I'm not using it, but UPSC now has started eliminating the elimination method. So please be very careful. Next. Okay, 31% have answered correctly. With reference to UCBs, consider the following statements. They are supervised and regulated by local boards set up by the state government? No, Reserve Bank of India. They can issue equity shares as well as preference shares. Yes, they are allowed to issue shares now. We have not discussed what is equity, what is preference. Please do not worry. I have not discussed. I know that. Why? There's a chapter called as financial market. There's a chapter financial market. In financial market, we'll discuss that. Do not worry. So right now, statement 2 is correct. They were brought under the purview of Banking Regulation Act through an amendment in 1966. Right? Correct. Right? This is also correct. Right option will be option B, 2 and 3 only. Next one. Okay, 62% have answered correctly. To combat demand side inflation, which of the following activities would be preferred by RBI? Buy government securities. Please tell me. If RBI will purchase buy government securities, this will increase money supply. If money supply increases, that will add to the aggregate demand. So first one is wrong. Increase repo rate. Increase repo rate. If RBI will increase repo rate, at least now all of you are able to connect the dots. If RBI will increase repo rate, loans will become costlier, borrowings will come down, so aggregate demand automatically will come down. Right? So second one is correct. Print more currency. If RBI will print more currency and distribute it, supply it in the economy, that money supply will increase, contribute to inflation. So third one is wrong. Decrease SLR. Right? There were a couple of students who said, so decreasing or increasing SLR, how it will have an impact on money supply. My dear, if SLR or CRR is reduced, let's say hypothetical number, let's say I have 100 crore rupee in the form of deposits, NDTL. Out of this, if I keep 20% reserves, 20% in the form of reserves, CRR, SLR, right? So that means now I have 80 crore rupees to lend in the market. I have 80 crore rupees to lend in the market. So if the reserve is reduced to 10%, I will have 90 crore rupees to lend in the market. If the reserve is increased to 30%, I will have 70 crore rupees to lend in the market. So now please do let me know, if reserves are reduced, CRR, SLR, etc., if reserves are reduced, can that increase money supply in the economy? If money supply increases, can the money multiplier also increase? Of course, yes. If the reserves are increased, will it reduce money supply? Yes. Will it reduce money multiplier? Answer is yes. Right? So decreasing SLR will increase money supply, can contribute to inflation. Fourth one is wrong. Second one is correct. Right option is option B, only 2. Okay. Next one. Okay. 33% have answered correctly. Why? In the context of Indian economy, which of the following is or the purpose or purposes of statutory reserve requirement? Statutory reserve requirements are CRR and SLR. CRR and SLR. Statement 1. to enable the central bank to control amount of advances, amount of loans that the banks can create. Straightforward. Correct. Second one, to make the people's deposit with the banks a safe and liquid. That is also correct. Yes or no? Right? Don't you think having a SLR mandate, understand this, having an SLR mandate, SLR means what? Statute to liquidity ratio. You should have certain amount of money out of your deposits in the form of G securities, cash, etc. What is the reason? Why does RBI mandate like this? Because in case of emergency, right, you can simply sell them, have sufficient liquidity, allow the depositors to withdraw, right, to make the deposits of the customers safe, right? That is also a mandate. Please remember this. I've told you, but the statement given here is slightly different. To prevent commercial banks from making excessive profits. No, that is not the objective. And fourth one, to force the banks to have sufficient vault cash to meet their day-to-day requirement. That is also not the requirement. Vault cash means absolutely keeping everything in cash. Keeping everything in cash, right? No, that is not the mandate of CRR and SLR. Okay, so 3 and 4 are correct, 1 and 2 are right. So right option will be option B. Right option will be option B. How number 3 is incorrect? My dear, tell me, where did I say RBI doesn't want the banks to make excessive profits in the context of CRR and SLR? You tell me where, how can you apply that to CRR and SLR? If there is no efficient monetary policy transmission, if there is no efficient monetary policy transmission, I can say banks can make excessive profits. But by changing CRR and SLR, how can RBI control banks not making excessive profits? Think, right? You think and do let me know. How do you think 3 is correct? Okay, and by the way, before I go forward, a technical point here. SLR, think of it and do let me know. Right? SLR will be counted as a part of liquidity. Liquidity coverage ratio, LCR. I'm giving you a statement. It's correct, by the way. Right? Think of it. SLR, the G securities that are held under SLR will be counted as a part of liquidity coverage ratio. Everybody is okay with this? Everybody is okay with this. Anybody says, right, sir, what is there in SLR? What is LCR? LCR basically mandates 100% of the money outflow. 100% of the money outflow estimate you should maintain in high quality liquid assets. G securities under SLR are high quality liquid assets. So automatically they'll be counted as a part of LCR. Okay. And one more point before I go forward, right? There is a term called as liquidity adjustment facility. RBI uses a term called as liquidity adjustment facility, LAF. Now, what is this concept of a liquidity adjustment facility? Under this facility, RBI will use certain tools to change liquidity in the banking sector. Very simple. RBI uses the tools to adjust liquidity in the banking sector. Please do let me know. Can I say the best examples of liquidity adjustment facility is repo and reverse repo? Let me know. Right? Can I say RBI using repo as well as a reverse repo can adjust liquidity? And those who will ask me, sir, what do you mean by liquidity in the bank? Liquidity in the bank simply means how much money is available for banks to lend. Liquidity for a bank simply means how much money is available for the bank to lend. That is called as liquidity adjustment facility. Okay. Now, next one. Okay, 48%. Which of the following measures would result in an increase in the money supply in an economy? One of the statement is slightly tricky. Slightly tricky. Purchase of government securities from the public by the central bank. This will increase money supply. There should not be any doubt regarding this. First one is correct. Sale of government securities to the public by the central bank, exactly opposite to the first. Fourth one is wrong. Now we can use elimination method, try to find out, but let's not use it. Let's not use it. Borrowing by the government from the central bank. You please tell me based on the discussion, if government of India will borrow from RBI, will it increase money supply? Let me know. If government of India will borrow from RBI, will it increase the money supply? Of course, yes, it will increase money supply. Second one is tricky. Many of you will feel, yes, it will increase money supply, but no, it will not increase money supply. Why? Deposit of currency in the commercial banks by the public. You feel it will increase money supply? Answer is no. Why? If the bank will utilize the deposit through fractional reserve system, that will increase the money supply. In fact, what does the statement actually mean? What does the statement actually mean? Let me show it to you. All of you remember the formula for M3? What is the formula for M3? M3 is equal to the cash that is held by the public. Cash that is held by the public. Currency with the public. Let's assume 1000 rupee. Currency with the public is 1000. Plus time deposits in the bank. Let's say 2000 rupees time deposits are there in the bank. Let's say demand deposits are another 3000 rupees. So cash with the public, time deposits, demand deposits. Okay, this is M3. This is M3. Now let's apply second statement. Let's apply second statement. Some of the people will take the cash deposit in the bank. Let's say out of 1000 rupee cash, people will take 500 rupee deposit in the form of FD. So now can I simply say M3 will be is equal to 500 rupees plus fixed deposits. These are time deposits. So time deposits will increase to 2500 and demand deposits will remain same 3000 rupees. Now please tell me from this to this, from equation number 1 to equation number 2, has the money supply in the economy changed? Has the money supply in the economy changed? Right? Money supply in the economy has not changed. So deposit of currency in a commercial bank by the public doesn't change money supply. First one is correct. Third one is correct. Right option is option C. Right option is option C. Please be very careful. Sometimes these kind of tricky statements are given by UPSC. Okay. Sir, how statement 3 is correct? My dear, let's say government of India will borrow under ways and means advances from the RBI. Let's say government of India will borrow under the ways and means advances from RBI. Will it increase money supply or not? Think of it. Will it increase money supply? Of course, yes, it will increase money supply. Okay, just to prove this particular question, right? Just to prove this particular point, look at this question. I'll not start poll because the question is straightforward. It was asked, I believe, last year only. Please look at this question. If you withdraw 1 lakh rupees in cash from your demand deposit account of the bank, immediate effect on aggregate money supply in the economy will be what? Solve it. I'll not start poll here. Simply solve it. If you withdraw 1 lakh rupees in cash from your demand deposit account or from your bank, immediate effect on aggregate money supply in the economy will be, can I say, option D? Can I say option D? The money supply will remain unchanged. Money supply will remain unchanged. And if you ask me, sir, how money supply will remain unchanged? My dear, just now we have calculated M3. Instead of you depositing money, you have withdrawn money. So don't you think out of M3, cash held by the public will increase by 1 lakh? The deposits, demand deposit will decrease by 1 lakh. So M3 will still remain same. It will remain unchanged. It will simply remain unchanged. Okay. Now, next question. Okay, 69% have answered correctly. What is or are the facilities the beneficiaries can get from the services of Bank Sati in branchless areas? It will enable the beneficiaries to draw their subsidies and social security benefits in their villages. Any problem with statement number one? Money is there in your bank account. You will go to Bank Sati, you will withdraw money. Now, whether this money is your wages or this money is your subsidy, how does it differ? Let me know whether this money that is there in a bank account, whether this is right, whether this is your right. Let's say Indira Gandhi Widow Pension Yojana. Under that, you have received amount, LPG subsidy, you have received in a bank account, or that is your wages that is there. How does it differ? Can you use Bank Sati to withdraw all of it? Of course, yes. Okay. So it will enable us, right, to withdraw the subsidies or social security benefits. It will enable the beneficiaries in the rural areas to make deposits as well as withdrawals. Of course, yes. Basic banking transactions. I've told you this, basic banking transactions you can conduct using Bank Sati. So right option will be option C, both 1 and 2. Next one. Okay. Did I make a mistake or did you people make a mistake? I think I made a mistake. I think I've made a mistake in choosing the option. Right. Okay, I've made a mistake in choosing the option. Right option is option B. I'll solve it, don't worry. Which of the following steps are used for contractionary monetary policy? Contractionary means what? Reduce money supply. Contractionary means reduce money supply. Which of the following steps are used? Okay. Increase CRR, increase repo rate. Straightforward. Increase CRR, increase repo rate. If CRR is increased, repo rate is increased, can I say money supply will come down? Anybody has a problem? CRR is increased, right? Repo rate is increased, SLR increase, money supply will automatically come down. So 1, 2 are correct. Decrease SLR, money supply will increase. So 1 and 2 are correct. My mistake, right? By while marking, I made wrong, right? I made a mistake. Okay. So option B is the right one. Option B is the right one. Okay. Next. Exactly opposite, right? Exactly opposite, but slightly tricky question. Solve it. Try it. One of the concepts I've not told you is a very small concept. I'll tell you now. Don't worry. I've not told you what is MSF. I'll tell you. Please don't worry. Okay, 40%. Again, if you have not understood because of the point number 2, don't worry. I'll explain it now. If RBI decides to adopt expansionist monetary policy, which of the following RBI will not do? Some of you have made a mistake because you have not seen the last part also. Right? Don't worry. Please have a look at it. So cut and optimize the SLR, cut the bank rate and repo rate. Please tell me. If RBI will reduce SLR, bank rate, repo rate, etc., will this lead to money supply? Yes. Increases money supply? Yes. Is it expansionary? Yes. But the question is, which of the following RBI will not do? So obviously 1 and 2 RBI will do 1 and 3. What about 2? Marginal standing facility rate, MSF rate. Understand what is MSF rate? Under marginal standing facility, RBI will allow the banks to borrow only for overnight purposes. Very, very short duration for overnight purposes. And why does RBI allow the banks to borrow for overnight purposes? Because the bank suddenly requires a certain amount of money. There is an emergency in the bank. Only for one day, bank requires money. And remember this, because the bank requires money for emergency purposes, only for one day, RBI will charge a higher rate of interest. Marginal standing facility rate will be larger, will be greater than repo rate. Okay, so that is a marginal standing facility rate. So if RBI will increase marginal standing facility rate, money supply will come down, right? Banks will borrow lesser, right? So it is not expansionist monetary policy. Second is the right one. Right option will be option B here. Okay. So that's it from my side. These are all the different questions. And by looking at the questions, at least now you should know this. The questions asked in UPSC are technical in nature, especially from banking chapter. These are conceptual. Now, any questions, please do let me know. Otherwise, I'll wind up the discussion. I'll conclude the discussion. Okay, is the leaderboard visible to all of you? Those are asking for leaderboard, I think it is visible to you. Any questions? Money multiplier question again, I'll repeat it again. Arey Baba. M3 is equal to cash with the public plus time deposits plus demand deposits. Have you by-hearted the formula or not? If you have not by-hearted, then it's a mistake. You'll have to by-heart it. M3 money supply is equal to cash with the public plus time deposit plus demand deposit. Let's throw arbitrary number. Cash is 5 lakh with the people. Demand deposits are 4 lakh with the people. And term deposits are 6 lakh in the banking sector. So what is the total money supply? 5, 6 plus 4, it will be 15 lakh. M3 will be 15 lakh. Money supply is 15 lakh. Now, from 6 lakh, right, that is a term deposit, or let's say from demand deposit, 1 lakh will be withdrawn by you. Does it not mean cash with the public will become 6 lakh? Correct? Cash with the public will become 6 lakh. And the term deposit will still remain 6 lakh, and demand deposit in the bank will come down to 3 lakh. So what is the money supply now? What is the money supply? Money supply still remains unchanged, 15 lakh. Okay. Statutory reserve requirement contain SLR and CRR, but why CRR name doesn't match? What is the issue? If the name is different, let it be different. Under statutory, there are two types. One is SLR and the other one is CRR. Right? Let the name be different. If SBI is considered as a nationalized bank, then why it is added to PSB separately? My dear, the laws which have been passed by the government, to nationalize SBI is different, and for remaining PSBs is different. That is the reason generally when you talk about nationalized banks, SBI is considered. Public sector banks, SBI is counted separately. Sir, you said that capital income will add liability or reduce assets of the government, but sir, recovery of loans is like assets coming back to government. So it's like increasing the assets of the government. So doesn't contradict capital income will increase liability? And I don't know what is the confusion there. I don't know what is the confusion. If the government will recover loans, that is whatever loans are given, if they collect it back, I've written it is a part of the capital expenditure. Why? The assets held, loans are assets. If the assets are coming back, assets will increase. Okay. Expenditure infrastructure, assets will increase. Loans given, assets will increase. Okay. What is MSF? Marginal standing facility. Marginal standing facility is basically a short-term tool where banks will be allowed to borrow from RBI only for short duration. Whenever there's emergency, they will borrow for only short duration, generally for overnight purposes, 1 day, overnight purposes. That is marginal standing facility. Okay. Sir, but taking loan to repay loan is bad. Economics. So component of interest payment is fiscal deficit should be lesser. My dear, please understand. taking loan is bad. Nobody is contesting it. But please understand the context of India. Look at the context of India. You take a loan because you do not have sufficient resources. You do not have sufficient resources, so you take loan. There is no other option available to you. But now the question is, out of the loans that you have taken, are you using the loan amount to take care of your current year expenses, or are you using this loan to take care of your past expenses? That is the point of difference in primary deficit. Okay, done. So we will continue the discussion tomorrow, and we'll continue with the monetized deficit as well as budget deficit, and we'll continue with the finance commission. We'll take up questions, then shift to the next chapter tomorrow itself. Okay, so take care. See you tomorrow. Read, revise, and update with current affairs. Thank you. Have a great day.